All right, welcome back to the Capital Mindset Show, everyone. We're just going to be waiting for our guest speaker. He's going to be joining us shortly. I was giving him some time. That's why we started a little bit late. But I'll just begin and kind of go through some questions here. But we'll wait for the main topics. Topics, as always, are listed in the description below. That gives us a general idea of what we're going to be talking about, as well as for you guys watching afterwards. You guys can see, okay, what kind of topics did they mainly go over? And if we go over anything that's like way off the beating path of what I put down in the description, I will try my best to remember to put them in the description or update that description. Okay, as you can see, you guys are enjoying this brick wall. It's obviously the brick wall that's behind me and not a green screen. It's a real brick wall that I put up myself. Totally legit. And yeah, so we ended the year and now we're in 2023. It's up to a crazy start, I'd say. Like, my goodness. We had a crazy day today. Basically, all the stocks were up. All the stocks in the portfolio were up. Well, there's probably a few in there, but the main ones, the ones that really drive the returns of the portfolio, those were up. And yeah, it's been pretty good. We'll see how sustainable that is. The executive bathroom, I can change it to the executive bathroom. It'll be just funny. Oh, by the way, well, I didn't do the intro this time. I see intentionally wrong raw. I didn't do it this time because this way it's a little bit easier for me and guest speakers to interact because it's on StreamYard versus something like OBS. But definitely, I need to set it up more properly. There's like a way for me to do it, but I can set up guest speakers better on OBS for next time so that Jay can actually see me. Or any guest speaker can see me and I can still host on OBS. But that's where I have the intro. That's why there's not an intro in this live stream. I love the intro too, don't worry. And I love the intro music. I like that. Gives a little bit of a different vibe. Okay, so let's see here. If anyone has any questions, now's the time to ask because I can kind of skip. We're going to do a Q&A at the end, kind of as always, but this is the time also. If you guys have any questions you want me to answer, I can more than welcome to answer those as well. And I guess we can start with kind of briefly touching upon topic. I just don't want to go too deep into it before the Jay joins, and because then we're going to be repeating. But I mean, I can say like how I feel about a specific topic. So one of the, and let me actually make sure that I have this here because I want to have the list in front of me just so I can keep this organized. Capital Mindset, YOLO into GEHC or no? LOL. Okay, so we can actually go over some stocks here while we're waiting for Jay. So GEHC, and this is GE Healthcare, by the way. You guys didn't know. This can't be right. Is it actually down 17%? That's a fluke on Google. I don't know. So that's probably Google's registering the old co, and probably the old co is kind of pricing in the spinoff. Same thing happened to BAM. At one point, I think Seeking Alpha was showing BAM had a 34% drop in a single day, and that was of course not true. So let me actually share my screen, and we can go with the first screen here. All right, as you can see this, and I'll put this over here so I can have the list in front of me. But GE Healthcare, actually GEHC, yeah. So I have to put GEHC. Did not. Okay, and then press enter. There we go, GE Healthcare. So the original GE down about 17%. I think that's just registering the new company. The new company sitting at $25.46 billion and will be, of course, as self-explanatory to the name, the healthcare portion of the business. I think a lot of community members are actually really interested in this company. And we are also kind of in that point in time where the market's kind of digesting, well, what's going on with this business? What is this business? Kind of similar to how when Raytheon Technologies and United Technologies and Raytheon merged together, they spun off Otis, they spun off Carrier, and you were actually able to pick up those stocks for actually a decent valuation. So yeah, it'd be interesting to actually take a deep dive on this. I think we can kind of go a little bit further than here because we got time. So let's go to the website. Let's kind of see if they have an investor deck or something like that we can go over. And actually, I can probably pull it up easily here. and I can come back and pull it up here for you guys. Okay, so let's go to investors. Who's this? Jay's just messaged me that he's joining. Investor relations, and it's not here just yet, I guess. All right, so we don't have an investor deck easily accessible from this website. I imagine I can find it just looking up this healthcare relations, and then here go investors overview. So here I just Googled it and then it brought it up. I'm going to call investor relations. Yes, this is the truth, and we have Jay. Jay's in the stream. How you going? How you doing, Jay?
What's going on, dude? Where'd you go? Dude, because you sent me that text. You go, when I get back, we should do a live.
Oh yeah. Well, I got back. I got back yesterday, so here I am.
Where'd you go?
I went to North Carolina
What
for
was
about a
going
week
on
or
there?
something. Up in the cabin and just enjoying the mountains and stuff. So,
Bro, I don't blame you for that at all. I have a goal of at a certain point in my life living in the mountains away from all the crazy people.
man, I'd honestly probably live up there, but like full time.
Where were you in the Blue Ridge Mountains or
So there was it's a town called Sapphire. It's near Highlands.
is it like middle of the state? Where is it?
It's more like south. It's actually bordering North Carolina. It's pretty close to North Carolina. Sorry,
From
South
Virginia?
Carolina.
Oh,
It's
it's
bordering.
border in South Carolina.
Yeah,
All
yeah.
right. Dude, awesome.
Yeah, no, it was nice. It was nice to kind of get away from everything, and we went hiking. Well, get away with a little bit because I was still kind of doing some research here and there at nighttime.
Dude, that's
Getting
not
away.
a big deal, man. I mean, if that's what you want to do, dude, I still do research. Even when I'm taking a break from actual stocks, I still do research.
Yeah, I mean, it's yeah. We all know it's like for all of us, it's kind of like a passion, anyways. Like we have genuine fun doing it, but
Well, to me, it's a puzzle.
yeah.
I say this all the time. It's like you sit around and do puzzles at home, but the stocks, they make you money and they're puzzles. So why not just do that as a hobby?
Well, now that I have you here, I'm going to ask you some questions, right? Because did you check out that? I saw that Julius Caesar, he's in here. He was actually messaging you in that live stream you did about the stock, the Fidelity. Did you take a look at that one?
No, dude, I was just chilling, waiting for you.
So, but there's like a little bit of a issue with like the book value measure for that one.
What's the name of this stock?
The Fidelity, gosh, the full name. I know the ticker's FIS.
F.
Fidelity National Information
I got it.
Services.
I mean, I'd have to look more. I don't like how the numbers are disconnected, but I mean, if I was to look at the primary metric, I look at 16 price to free cash flow, 16.75. I mean, it's within the range. You know what I mean?
Yeah, there's some more added nuances because like yeah, it has a really low price to book, but if you actually look at what's included in the book, there's a lot of intangibles.
Yeah.
There's a huge acquisition they did. Okay, driving growth, high teens. I'm looking at this one, which was requested for GE Healthcare. They just spun off.
Okay. Yeah, no, I'm using stockanalysis.com to look at it.
For GE or the other one.
No, Fidelity.
You know, there's that Fidelity. There's also another one which I think is uh this one. Let me make sure it's the stock. The I think it's this one, FNF stock.
F.
That's another
And
stock. It's another Fidelity National Financial. But that's an insurance stock. So there's a couple with the name Fidelity, by the way.
yeah,
So
no, I got it.
that one is an investment recently by what's his name? Carlyle. Carlyle's been buying up that one. And there's an interesting kind of narrative to that one. We can get into that for anyone watching. Let me know in the comments live if you guys want me to
No,
discuss that right now.
I'm interested because I mean, the first thing that comes to mind, this is the first time I've ever looked at it. Again, I'll go to my price to free cash flow. It kind of scares me that it's down at 2.43.
Which one? FIS or FNF?
FNF.
Yeah, so that one's going to be pricing in decrease in cash flows into the future because remember what happened 2020, 2021, we had a massive amount of refinancing and we had a massive amount of purchases in real estate, sales in real estate, but purchases in real estate because they're going to sell title insurance and also loan or home loan insurance. So that provides a lot of instances for them to collect, the insurance premium. While, is that same activity going to continue in 2023? Probably not.
Yeah.
So yeah, they're going to look really cheap in the trailing 12 months free cash flow, but the reason is because the market knows it's not permanent. It's going to like slow down quite a bit.
Yeah, that's why, dude, why I get hesitant on a lot of this stuff and just saying it on YouTube is I'm afraid people like if I come out and I say a lot of the things I use to initially look at a stock, I'm afraid they're going to use those to try and justify buying or selling a stock when there's a lot more nuance that goes into it. That's the hardest part, where it's like you're looking at it, you go, okay, here's the metrics I use, but you also have to factor in there's nuance. I understand what I'm doing for my process. I might not understand what somebody else is doing.
Yeah, correct. Well, I'd say to add to that, yeah, you definitely have to understand the business, understand where it's sitting at right now, and what's going to happen to that business in the next couple of years. So
Yeah, and another thing is this. I don't think I've made this clear enough. Like a stock could hit every metric that I want it to hit, but if I don't understand the business and their model, I'm still not buying it.
yeah, no, I agree because then how are you going to make accurate projections into the future?
Yeah, I can't. If I'm sitting there and I'm going, well, I don't really, it goes back to, a lot of people on YouTube go, oh, you just need to buy this stock. But you go back to the people that actually know what they're doing. Look at Warren Buffett in the late 90s. He goes, I don't understand how these companies are making money. So he just didn't buy them. And he avoided the whole tech bubble collapse.
No, I agree. Yeah.
That's another thing that people don't get on investing is staying in your lane. Everybody has a hobby or just some other knowledge that they have where they know a market more than somebody else might, and that's the market you should probably go to and buy.
Yeah. Kind of sticking to exactly what you're more familiar with and comfortable.
Well, I mean, look at it like this. Tattooed Chef, even if it was putting up numbers that I liked, I would still look at you and go, I don't know anything about the vegan soy boy market, so I'm still not buying it.
Boom, 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 boom. Echoes. Thank you, Echoes.
Echoes is like everywhere. He was on my live stream. He's on this live stream.
Well, he's asking us here, please talk about Palantir and what do you guys think about it? How low do you guys think it could go? Is it still overvalued at this price? All right, let's bring it up. And okay, so why? Why though?
Okay. Hold on.
Let's go over some metrics. Look at that beautiful chart.
Okay, so the first thing I have to point out is that Palantir is only showing free cash flow because of their stock issuance.
Yep. And let me actually go ahead and pop that in.
Because I tried to make this, like, I don't know if I made this clear in the video I did on Palantir where I was mocking everything money, but I know I said in there I would not buy Palantir at any point right now.
I'm just using the same website you normally use, stockanalysis.com. So we're all familiar with
Yeah.
the site, and everyone can see this information is taken, free website. We could just go to
You're
the
paying,
financial.
you're right here. I can tell you on this alone, you're paying 68.64 price to free cash flow. You're way outside of any metric that you should consider buying this. Like when I use the Fibonacci sequence, what that's telling you to buy a stock at is 6 times price to free cash flow. That's what it's saying. Like you just go look at the math. 2 times 3, 6. It's 6 times cash flow. Why I throw that number out is because it sets a low number that I think is unlikely for somebody on the internet to lose money. That's why I do it. But I'll tell you, I don't want anybody buying on my recommendations anyways.
Yeah, I'm going back to Seeking Alpha because it doesn't seem like stock analysis breaks it down
It does.
perfectly.
Stock analysis has its problems, and some of that is I've looked at numbers in stock analysis and they're wrong
Yeah, they
at
don't
certain
aggregate
point on
correctly.
certain stocks. You got
So
to
if
be wary of that.
this kind of corroborates what you're saying. So if you look at the stock-based compensation, this is actually, I think, a pretty popular argument that the net income, right? It's reflecting that, but their cash flow positive only because so much of that is being expensed through stock-based compensation. Yeah, there's a lot of companies in the software space that are having a similar issue. I think you're probably familiar with CrowdStrike too.
I've heard of it. I've never really looked at them.
Now, that's a really high quality company. A lot of people in the community really like that company, and I think as far as everything you can kind of see or find on that business, they're the best of breed, best in class. But kind of just not comparing Palantir too much to that. A lot of people make some of the same criticisms to that one as well. So
Bro, I actually how I knew that was the problem is this. It was actually a sub that explained that to me because I mean, like for me, I don't care at a certain point. You know what I mean? Here's where I don't care about the stock. If you go and you look at Palantir's,
oh, I do have the wrong company. That's funny.
yeah, Palantir on stock analysis, why I don't care is if you just look at the EPS, it's negative.
Hmm.
Right? So I was like, I don't know why there's free cash flow if the EPS is negative, and then I was just out. So it was a sub who commented. He said it's stock-based compensation that's giving them a positive cash flow. Because for me, if you're negative EPS, I'm not interested. I
Yeah.
don't care like what the reason is. I'm just moving on. Because, there's 10,000 stocks in the world or more. I'm not going to waste my time when I see that you're not producing a profit for me.
Yeah. So that's like one of your thresholds they have to pass. They have to be gap net income positive, and then you worry about like looking at cash flows, et cetera.
Yeah, because here's the thing, dude. I have alternatives. I have
Hmm.
VT or VTI or VOO, whichever one somebody wants to choose as the main core holding, which is what I recommend, is that your main holding is some form of a index fund. Now, what index fund that is, you're not really going to get much of an argument out of me as long as it's a quality one. If you say, Jay, I read an article and it looks like small and mid caps return more. So I'm going to make the Vanguard mid cap or small cap the core holding of my portfolio. I don't have a problem with that. Now, ultimately, I don't have a problem with whatever you do. It's your money. But like when I look at it like that, I go, okay, he's going to do well because his main holding is an index fund. So then I go, I don't see the point in sitting around trying to find reasons to buy a stock. I see a point in trying to find reasons to eliminate a stock and then just moving on, because I have that alternative 6 to 8, 9% return I can get from those index funds. I don't understand why you're not going for at least 10 to 12%. That's me, because it just seems like a waste of time other than that.
Okay. Well, to finalize the answer to Echoes from Above's question, do we think it's still overvalued? Actually, yes. And do you think, how low do you think it could go? I really don't know. Well, it does seem that Palantir at the very least might just trade sideways for quite a long time. It could be that this is kind of where it's found its bottom at $13 billion market cap. Just really depends how crazy they go with a dilution. But I'm not going to be playing the game in either direction. I'm not going to be playing the game shorting it, expecting it to go down. And I'm not going to be really interested in purchasing any shares at these prices right now. I'd have to see a lot of changes because there's just other things for me to put my money, similar to how Jay was kind of describing it. There's alternatives, and Palantir is competing with those alternatives as to where he's going to deploy his capital, where I'm going to be deploying my capital or have been deploying my capital. So,
well, it's something that I've said. I go, all right, look at Palantir, right? Then go on YouTube.
Yeah.
Look at all these people pumping it. At that point, it's like, do you think there's probably a better option in the bargain basement bin somewhere? Maybe in the unloved small and mid caps, because everybody's been talking about these tech companies for the past 2 years, and that's where they've been putting all their money. So I look at it and I go, there's probably an unloved small, mid cap, or large cap out there. Go find it.
What do you think about this comment?
Sofi greater than Palantir is not greater than Baba. Neither is Sofi.
No, Sofi is the greatest stock, followed by Tattooed Chef, followed by Palantir, followed by Baba, then followed by Amazon.
Bro, I'll be honest with you. I wouldn't buy Amazon with your dick and you pushing. I really would.
Oh, I converted Kingdom of Finance, okay, but the thing is, I feel like I'm becoming like an Amazon shill, even though I'm not buying the stock. I'm trying to like red pill you to the company, right? At least,
bro.
Right?
I love Amazon. That doesn't mean I want to buy their stock. I love the fact that I order something and it shows up like 36 seconds later.
All right.
But as far as like, all right, I'll show you what I'm looking at. First off, I don't
share your
have
screen.
All right, hold on. Okay. So present, share screen. Screen sharing is okay. And
we'll get to this one, Ricky.
Okay. Can you see it?
Yep, and I added it here.
Okay. All right. So if I come over here, here's why I don't like Amazon. I know what they're doing with their free cash flow. They're reinvesting, buying jets, all of that. But because that's negative, I have to invest off operating cash flow. Operating cash flow right now is 21.9. I want operating cash flow 10 or under. That's why I don't like it. I don't like investing off of operating cash flow.
Yeah, you do. That's the multiple, right? That's the multiple.
Yeah. It's 21.90. Yeah.
Well, that's usually that's because I'm seeing like there's a massive change in accounts receivable. That's like the biggest negative driver.
Well, as much as we've all soured on them, like Mo on Everything Money, he had a good point about buying. So if you watch Mo's analysis of Amazon, what is so funny about like the numbers that he ran is because it just lines up perfectly with what I'm saying about free cash flow price to book when you go and look at his numbers. He accidentally stumbled on it and it was hilarious. But you know, I have to be fair to that dude. I do agree with a lot of his analysis on Amazon. For me, you're at a 6.32 price to book. All right. Cash flows take precedent for me over price to book, but I have negative cash flows. I don't like that. You know what I mean? Because it just makes it harder to actually assess what I should pay for the company. That's why I don't like it. I also don't like that Amazon is kind of a hype stock.
Really? You would say so?
Well, I mean, when you have Jeremy Lefebvre telling you that you should buy Amazon, I kind of think you should short it at that point.
Oh, he's been saying to buy Amazon.
He has been for a while. He was talking about how it was like not that long ago. He was talking about Amazon. And then I get really leery when that dude talks about any stock.
So, but Jeremy's been talking about Amazon, you said, for a while now. So he was presumably talking about it at way higher prices.
Well, look, dude, if we go back 10 years on Amazon, so the real negative cash flows started in, according to stock analysis. Again, I would want to pull up their 10K and do a lot more. But if you look at it, 2021, and that jives with they started making massive investments. But even if you go back to 2014, we're talking about a price to free cash flow of 73, 2014, 42 and 15, 34 and 16. For me, it's just outside of the range of the metrics I use. So I'll just flat out admit it. I'm a Benjamin Graham fanboy. So pretty much that's whose techniques I aped.
So, but do you think that the Benjamin Graham playbook can be, you're going to miss out on like a decent number of opportunities because like the cigar, but instead of paying a fantastic price for okay company, you're missing out on paying fair prices for fantastic companies. I'm not saying again, Amazon's buy at this price. I'm more trying to, push people to say, oh, Amazon's a pretty good company.
No, this is why. Because I have the alternatives of an index fund.
True. Okay.
If I had no alternatives, there's a lot of stocks I would buy that I don't. So because I have the alternative, for me in my mind, I just go, you know what? I don't like this stock. I have $300 or whatever to invest this month. I'm looking at Amazon. I don't like the price to free cash flow or price to operating cash flow. My money's going in VT or whatever index fund anybody has chosen. You know, if you chose a high quality index fund, good.
What? Not Jeppy. You're not talking about Jeppy, obviously.
No. or HYLD, whatever that dude, the passive index fund investing dude from Canada is trying to say, like with his alternatives on yield and stuff. And I'm just looking at him and go, bro, I'm just going to tell you, you're not beating the S&P 500. F off, go away.
Yeah. Well, this comment by Andrew. Hey, who could have predicted this? The layoff of an additional. It finally came out the news that they were doing it. So, yeah, this is the Q1 2023. Everybody, layoffs Q1 2023. Anybody remember?
Yeah, no, dude. Well, I mean, we've talked about this. You pointed it out, and I throw it out there all the time. Retail is a leading indicator of where we're going.
Retail investors or retail as in
retail.
Yeah, services.
Because I mean, Amazon's retail, and they're laying off people. I mean, my thing is this, dude. When you just look at the hype stocks on YouTube, I mean, I just think it's going to be rare that you're going to find a gem. Because think about like what they're doing at like what the people on YouTube are doing. They just pick the most overhyped stock. Amat Kurjagia, or however you say that dude's name. He throws out Palantir every 2 weeks. And it's like, dude, all of
Who
these,
does it? What did you call him?
I don't know. What's that dude's name? Amit Kurkagia or
Oh,
whatever.
I don't know his last name, but yeah, the Amit guy. Yeah. You should know this, by the way. So this was when I was in the cabin on vacation, and I just commented super quick, like, because some people in the community, like, they'll watch the stuff when they talk about like the banks.
Yeah.
And specifically SoFi, because banks, for everyone who doesn't know this, banks are one of the most difficult businesses to analyze.
Mm-hmm.
And it's always very fascinating. I mean, this is actually the first time in a long time that I can remember from recorded investment history that retail has had such an obsession with a bank stock. Well, the company in question is SoFi, which we have to talk about because, I have it on the agenda that we were supposed to talk about Tesla stock. We haven't gotten to that one yet because I imagine you have a lot to say. We also have SoFi stock because, I mean, come on.
No, I got a lot to say about Tesla stock and Elon's clownery.
All right, we'll get to Tesla after SoFi. So we'll go in that order: SoFi, Tesla, because we went through Palantir, so that one's out of the way. So SoFi, and yeah, it's quite interesting fascination. But anyways, I was on the live stream or watching it because, again, one of my followers was like, "Hey, you should check out what they're saying about SoFi," and they were talking about like price to book as the measure. So actually, on stock analysis, yeah, put it in SoFi. I'm watching your screen, and everyone else is watching your screen, so no pressure.
Bro, here's the thing I keep saying about price to book. Price to book is ultimately a secondary metric.
Yeah, well,
It's always free cash flow. That's your number one thing to look at because cash flow is the lifeblood of your company.
well, I'll tell you the interesting part. So, but just pull it up real quick. So SoFi,
Okay.
and then we'll go to like their book value or price to book. But anyways, I made a comment saying, like, their thought process was like lacking nuance. And I legitimately believe that and still do. We'll explain why a little bit. But again, you guys can check out my older videos on SoFi, and you'll kind of get what they were
Fabio,
lacking.
talk for a minute and we'll get into this. I got to take a piss. Sorry. Dude.
Okay. So I'll bring you guys back to this. But yeah, if you look at SoFi stock, so look, it's up 6% today. But right now it's trading, I think, at above at 0.8 price to book, and at 0.8 price to book, retail, automatically attributes with bank stocks, right? That's cheap, right? If it's trading below 1 price to book, it's cheap. It must be a buy. Well, not so simple, not so fast. I wish it was that easy. And like, let's take a look at other banks. There's it depends on the quality of the book. That's like the main thing you're kind of looking at, and also the return on that the bank is making on their book, which is also very important. Okay, so when we're looking at the operations of SoFi, right, they're not currently profitable. They're not currently making any money on it. There are a lot of non-cash expenses. Yes, we can recognize that. But the quality of their book is actually really lackluster. And it's actually one of the worst types of loans you'd ever want to own, especially if you think that the economy is heading downward. And there was actually some interesting, I'm not going to talk about it here on this live stream, but there's some further research going on behind the scenes that was kind of spurred by a valued member of the community, that the way that they're restructuring the student loans, it's actually kind of interesting because there might be even more degenerate, less protections for SoFi than I previously thought, which is actually makes a lot of sense now why there's such high short interest, because I'm kind of penciling that out together. But yeah, it's pretty crazy, the obsession with SoFi, and then all the thesis around SoFi is like, oh, the higher income people use SoFi, and then I'm looking at, they have early, let's say, paycheck products, so you can get your paycheck early, stuff like that. Stuff that I really don't associate with really high income people or high net worth people even. But yeah, and even I think, like, for example, their brokerage is a little bit lackluster. It doesn't really offer anything special. If the more money I have with them, like there's banks and brokers that the more money I put into their bank or broker, they begin to offer me sweeter and sweeter perks, and that actually incentivizes me to keep more and more of my money with them versus another bank. Even like something simple like, the preferred rewards program from Bank of America actually offers pretty interesting perks for a lot of retail investors, in my opinion, starting at just $20,000. And then it scales up to $100,000. And then after you get to the 500,000 plus, they have like a loan program. But I think even like M1 Finance is like a loan program, et cetera. But anyways, all these other banks, they offer very interesting products. I think you have the after 250,000 or so in Chase, you get the private client. And then beyond that, there's levels that are really not, I guess, advertised too much. But anyways, so
Yeah, you got that Brad Pitt level for JP Morgan.
yeah.
But no, dude. All right. So I'll tell you what I'm immediately looking at and
Let's
why
go
I'm
for
just
it.
not interested in SoFi.
Why? Tell me why.
You have negative operating cash flow.
Ah,
Just on
well,
that, I have better crap to do.
even kind of ignoring that, right? Because, well, with operating cash flow, banks are going to be a bit problematic on that front. Like,
No, I know, but I'm just saying again, look, I know with my techniques at some point I'm just going to miss a banger. But with doing it this way, I'm just going to miss most of the bad investments. That's why I do it.
yeah.
You
Oh
know,
yeah.
it's just like when I come over here, I use the financial ratios first, and I ask myself questions. Am I interested in this company? You come at me with negative operating cash flow. I'm just not interested. There's just way better things to look at. Your EPS is negative. I mean, I don't understand the hype behind this company. I
Well,
also I also don't like their jump in revenue, but it's probably normal. But it did because when you're looking at a 74% increase in revenue from 20 to 21, I just don't think that's sustainable.
well, I think they're growing off of a small base, so I don't find that the issue. But let me see this. So I know that Anthony Noto, the CEO, which is another reason, like, retail is so funny how they think sometimes. I'm not even kidding how funny they are. But so they look at Anthony Noto buying up a bunch of stock, and yeah, traditionally that's actually seen as a bullish sign. And there's nothing else. I wouldn't call it a bear sign if the CEO is buying stock. I think he put
No.
about $25 million of his own money, and that's kind of perplexing even some of the retail investors who are a little bit hesitant on it. But I took a quick look at the compensation. I want to actually look a little bit further into this, but the compensation that he's received, I think in 2021 was totaling around, I believe it was around 100 million. But I have to look deeper into that compensation, if it's restricted or not, if he's able to access it immediately, or if he was able to, realize a lot of that right then and there. So it's private and federal forgivable. Oh, yeah. So I'm getting some stuff sent to me right now, actually. Ooh, wow. Uh, okay. That is interesting. So there's something in the works apparently to actually forgive student loans, federal student loans, from bankruptcy, which is not normally how it is now. But that would be a problem. This was just sent to me.
Yeah, I mean, if there's something in the works, that would help. But I mean, right now, you can't discharge student debt federally. You know what I mean? Like, you have to pay it. Doesn't matter what position you're in. They're actually, for student loans, they're actually withholding Social Security from people like they're in their 60s and they haven't paid off their loans.
This is something from Dan was saying. So this is what actually I went ahead and pulled up. So Dan is saying, Capital Mindset, let's appreciate that the CEO of SoFi makes more money than Jamie Dimon at JP Morgan.
Yeah, that shouldn't happen because Jamie Dimon's a stud. Honestly, like you laugh, but bro, let's say you had a company, right? And Jamie Dimon walks in to run it. Wouldn't you be happy?
Let me see this. This is actually
dude, Fabio, I'm going to be honest with you. I'm a big fan of that dude.
Oh, I agree. I mean, he's like the superstar in the banking world, followed by I think the CEO of Bank of America and Wells Fargo. Wells Fargo one is the rising star. When Jamie Dimon retires, I believe the next in line for that, let's say, pedestal will be the CEO of Wells Fargo.
Well, Jamie Dimon's a stud, man. He's out there freaking telling AOC how stupid she is.
Well, I mean, someone's saying carp over diamond.
But I mean, like with that dude, I mean, when you buy JP Morgan, you get a stellar leader. I mean, whether you want to buy the bank stocks or not, but I'm just saying, leadership does factor in. Like when I'm looking at a company, leadership does factor in as the story.
No, I agree. At JP Morgan, I mean, I think it's weathered a lot of the storm. Let's go to like the past year or so, and I'll put in some other banks in here. So let's
you can throw in Bank of New York Mellon.
I'll throw in Bank of America and Bank of New York Mellon is BN or BNY or
I think it's BNY. Is it?
Bank of New York Mellon, Bank of New York Mellon. No, it's not.
Is it BNK?
Nope.
God damn it. I'm off.
All right, so let me also throw in TFC, Truist Financial Corp, more regional name. Okay, so we're seeing all these kind of together, and you can see that JP Morgan kind of weathered the recent drawdown in some of these banks. I'll throw in Citigroup because why not? Yeah, you can see Citigroup kind of following the same line as the other guys.
Buffett loves Citi.
Nope. Well, Citigroup's one of the bigger banks, primary dealer. It's also trading well below book value. I think it's at 0.6 book value. Again, it deservedly belongs there because they don't make a good return on their book. Relative, like JP Morgan makes one of the best or some of the best returns out there. And so they actually do deserve to trade at a premium to book. Also, the quality of their book in kind of the more qualitative measures, not necessarily like the return measures, is pretty good. Okay, we are getting BNY or BNA, but I think it is BNY. It just wasn't coming up from bearish on Google. We should short Google because of that. But someone said carp over Buffett, by the way. That's Fuhad over here.
He said who?
Carp is better than Buffett. he's joking, obviously.
Yeah. It's like I always say to people, it's really not much better than Buffett.
Yeah. Well, SSH with banks, you can actually use price to book because a lot of their assets are in essence like the same. It's not going to be a lot of intangibles in there, so it's fine. It is BK. It is BK. Okay, so that's that's right. They're the one with the best ticker symbol for a bank, BK, bankruptcy. So no, they've also kind of weathered. They did a little bit of a rally. They didn't really draw down with the other banks, so no, they kind of held their own.
Bro, my uncle, when he passed, why that's always in my portfolio and it always will is sentimental value. So I've been watching that stock for years. And, just one of the things you kind of learn its personality. I add shares here and there to it.
Man, it's literally, wow. Imagine buying here. The opportunity cost 25% over that time period.
Bro,
Patience.
Let me see something because I got to show you. All right, hold on.
So much of
I
the
was
current.
looking at JP Morgan. I'm interested actually.
Really?
But yeah, I don't know. I'll have to go do research, but
I mean, with a lot of these banks, it is also a buyback story, like a cannibalization story.
so
So,
yeah, no, I know. But where I got my BK stock is when I was in Iraq, my uncle passed in 2008. So that's when I got it. He left it to me. Left me like $3,000 in BK stock. And that's why it's always in my portfolio and always will be.
it's like,
Whether I make money on it or not, I don't care.
yeah, no, it's like receiving a watch or something. It has sentimental value. Makes sense.
Yeah.
Makes
Yeah,
sense.
basically. It's
You
my favorite.
reinvesting those dividends?
Huh? Yeah.
You reinvest? Oh, okay,
Yeah,
yeah.
drips on. I've been I left it because I mean when I first got that stock, I was in the military. I didn't know anything about stocks. I was like, oh, my uncle, my favorite uncle, who was like my grandfather, left me this. I don't know what to do with it. What do I do? And then I just go, whatever. They're paying me a dividend. I'll just leave it in there. And I've left it in there the entire time. I've sold some off to put it into index funds, but for the most part, I just leave it alone.
My good. Well, we'll see what it's at in like 20 something years. So those dividends are being reinvested.
Oh, bro, trust me. He hooked me up, even with that, even with what people think would be a small inheritance. He hooked me up. BK has been quite nice to me.
Yeah, I can imagine. Um, so wait, what is your interest in JP Morgan at these prices though? What's kind of catching your eye?
Hold on.
They say, ooh,
Listen.
Jay Naugy is nasty with the drip.
Yeah. What am I doing here? All right. Chase
And
Manhattan.
then we'll go to your screen here. This is easy to do. By the way, no 1080p on this live stream right now because it's on StreamYard. Normally I stream on OBS. I just gotta take the time because I figured out a way next time we do stream that you'll be able to see me and everything will be fine. You can see me and Jay at the same time.
Hold on. I was just looking at it. What interested me was what you're paying for free cash flow.
You're looking at the free cash flow of the bank? Because I would
Yeah. What you're paying to price to free cash flow. I'm not saying I'm buying it. I'm saying it interests me.
Oh, JPM.
Jesus Christ. I'm retarded. Sorry, I've been
No,
drinking.
because you're thinking Chase. So
Yeah.
I got you.
There you go. That would interest me. Whether I'm going to buy it or not, I don't know.
I mean,
I have to
okay.
do more research. I'm just saying, like, because I mean, on a lot of these stocks that we look at, we're doing preliminary research. I haven't really looked at JP Morgan and gone balls deep into it.
Of the banks right now, the ones that I'm actually interested in, unironically, is well, I've been accumulating a bit of Wells Fargo and Truist Financial, and I can give you the quick TLDR on Wells Fargo, but with
Yeah.
Wells
Give me the
Fargo,
one on Wells Fargo because I don't really know that much about it. I really haven't done research on it.
so the gist of Wells Fargo is if you actually take a look at what their holdings are, it's probably one of the most conservative out there right now of the big banks by far. And if you were going into a downturn, that's actually going to really help the bank out, kind of weather the storm. And actually, they've been scoring among the best in the stress tests. They've actually been the bank that's been allowed to continue to do buybacks throughout the year, which actually was a bit of a big deal because, you know, the buyback tax is now coming into effect. So Wells Fargo was actually continuously able to buy back some shares. And again, that's still part of the main story. They haven't been able to grow their asset because they've been capped on their assets because of the fiasco with, you know, creating multiple accounts. They got a new CEO. This new CEO is much higher quality, much higher caliber. I do believe he came from Bank of New York Mellon, by the way. Fun fact. I'm pretty sure he came from there. And this CEO, I think when Jamie Dimon, sorry, leaves, he's going to kind of become that rock star in the banking industry, especially if he turns Wells Fargo around. And if you believe that we're heading into some kind of greater downturn or have been in one, and Wells Fargo is the best position for it because the asset cap was a blessing and a curse. It was a curse because they weren't able to just balloon their balance sheet up, but it was a blessing because what they did instead, what they elected to do instead is filter out all of the gunk and kind of keep the pristine assets and just accumulate a ton of those. So I think a lot of the strong mortgages and loans like that, treasuries, etc., stuff like that. So that's kind of been the bedrock that they've been kind of building out. Wells Fargo of the big banks is the most exposed to mortgages, by the way. They're not the biggest mortgage lending institution, but they are the biggest of the big banks. So yeah, that's kind of been where they're at. And now if we kind of enter a time where banks, you know, they're a little bit less capitalized and you got this big bank that is pretty well capitalized. And then I would expect at some point the Federal Reserve or sorry, regulators to lift the asset cap. At that point in time, I think the bank can really expand and kind of pick and choose what they take on from the more distressed banks. And what do you think they're going to take? They're either going to take the not so good assets at fantastic prices or the great assets at the prices they basically want in order for the other bank to kind of other banks to survive or other entities to survive. So,
well, I mean, in just looking at this real quick, I'd be interested in Wells Fargo too. So,
oh yeah, the one issue that they've had really is their asset cap. It's been a huge limiter for them, but if that, I do expect that to go away. And once that goes away, I think they're one of the best capitalized. A lot of people judge banks on their banking experience. And going back to SoFi, that is a huge thing that retail investors seem to be doing, is judging the bank or the quality of the bank based off of the interest rate they can get at the bank. I find that one of the most funny things people are doing. They just go, SoFi has I'm not kidding, Jay, by the way, when I say this was one of the arguments that SoFi has a really high interest rate and the other banks just can't compete. And so that's one of the reasons why SoFi is better, because they can offer you a higher interest rate. They're adapting to what the customer wants. I'm just like,
I always knew that. Like, I was always praying for my mortgage to go up because I really like paying higher interest rates on money I borrow.
Oh, no, I'm saying for the savings account, not for
bro, I know what you're saying, but it's like I had to mock the higher. Okay. All right. I get what you were saying. Like, but I mean, they pay a higher interest rate than other banks, and then they're losing money.
Yeah. Elemental Tamago, I think this is said with a bit of irony, because it's actually the opposite that is true. It shows they're more in desperate need of capital. They're willing to pay you more for your capital. They're like, you know, please deposit here and we'll give you more money.
I mean, look at when you talk about the interest rates, like, oh, it's a better company because it's going to pay higher interest rates. Okay. You know, that was the thing we pointed out with crypto on the whole thing was like, all right, look, when they're promising you a 9% return on your money, 9% interest rate for money that you store with these crypto brokerages, what do you think they're doing to get that money? They're either diluting the shareholder or they're taking on riskier and riskier bets to be able to pay you because it's a Ponzi scheme.
No, yeah. No one could have predicted that. I don't know what you're talking about. Literally no one was saying that at any point in time.
Yeah. Yeah. Dude, yeah, there was nobody talking about SBF like this dude's a fraudster.
No one. No one said that ever. It was completely out of the blue, and no one could have predicted this. Kevin O'Leary, all of them, none of them. It was impossible to tell.
Right, dude. The whole thing with SBF, I was like, I watched one interview with that dude, and I just go, yeah, this dude's a moron, and I moved on. I thought everybody saw that. But then after FTX collapsed, I went back and I'm like, oh, I was unaware of a lot of stuff. Like, who was it? Kevin O'Leary, or no, it was what's his name
Tom
from
Brady?
the street?
Oh,
No,
never mind.
where he said he's the next JP Morgan.
Jim Cramer?
Yeah, that was who said it.
Well, that was the bearish signal on his career, was if Jim Cramer came out tomorrow and was like, you're gonna be the next Warren Buffett, short everything I own.
No, I agree with you.
Short everything I own.
If Jim Cramer came out and he said, yo, Jay Naugy, I really like your advice for sticking with index funds, I would sell all of my index funds.
You would do the opposite of what you're currently doing.
Yeah, I would go.
Wrong.
If Jim Cramer's telling me that index funds are the way forward, I might as well just put all of my money in Tattooed Chef.
So Bacon Bombs is apparently, I don't think he's too happy about it, us talking about SoFi. He's saying, oh my God, why do you even tune into that trash? He's talking about, well, it's because it's sent to me. Okay. And it's because I have a particular affinity to bank stocks. And so some of my subscribers in the community, they kind of know that about me. So every time, something is maybe said that they know I'm going to kind of cringe at, they take full enjoyment. They don't necessarily have to see my face. They just take the enjoyment to just send something over to me and say, hey, check out this. Because, they just know, they don't even have to see my face. They just know it, in the back of their mind, what it will look like. And so they find enjoyment in that. So I end up watching it because I watch, some things that people send me. And no, I do not, because no one sends me that. And I'm not really interested in those kinds of companies. So I wouldn't really even, I'm not attracted to click on anything talking about that stuff.
It sounds like pretty similar when one of my subs mentions Kathy Wood.
Oh.
And then I just see red and I went headbutt a tree.
Well, I'm sorry, but we have to get into this. Come on. You know what this is.
It's about Kathy Wood again.
Do you
Am
see
I
the
forced
screen?
into it?
Take a look at the stream screen right now.
Oh, PP.
What do you see there on the 1 year price performance? But it hasn't been out for a year. It's only been out since November, end of November.
Kind of what I thought would happen when at one point Tesla was 23% of his portfolio.
Well, it was 100% now. I actually just filmed the video, which I'll be releasing at some point. It's me reacting to Kevin's newest video. Someone in the community sent it to me. And for that reason, I think, and I said, oh, wow, that's a layup. I'm going to definitely react to this video because he makes some very interesting arguments about Tesla. And I don't want to get too much into it because that is its own separate video and you'll hear my thoughts about it. But he compares it to some consumer staple companies and basically makes the argument that these consumer staple companies are expensive. Therefore, Tesla and they're growing slow, and because they're growing slow at high multiples, therefore Tesla, which is growing at X amount, is cheap. Therefore, you should buy Tesla. That's his argument.
Well, dude, there was one day, I think it was Kevin, was going on and on about the PEG ratio.
Oh, he does.
In saying that it was a buy, but I was just sitting there and I'm like, bro, you're using all these metrics, you're grasping at straws, dude.
Mm-hmm.
I don't know what to tell people on Tesla. I'm actually, quite frankly, sick of even talking about this stock because it's so overhyped. And that's also why I'm just baffled why people still listen to Meat Spin. I'm like, what more do you need to see to know that this guy doesn't know what he's talking about?
Can I say something super quick here about
Yeah.
this? Do you notice something that's missing here?
No, because I've been drinking.
There are no articles. Anyone out there, come on, Seeking Alpha right here doesn't have an article on PP. Who
I
will
don't.
be the first article writer on PP?
So this is right. This is my question about like Meet Kevin. Like, I don't understand. He's a YouTuber. He's got like, what does he have? Like 2 million subs, something like that.
Yeah, probably. Let's go with yes.
Okay, so even even with 2 million subs, when you look at that, that's nothing in the investing world. I don't understand why anybody would just look at this ETF and go, oh, a YouTuber started it. I'm going to add this to my portfolio. I don't get it. I really don't understand it, to be honest with you. It just, you look at that and it's just a massive piece of crap.
I mean, just looking at these, like Tesla being 25.99% is pretty degenerate. Apple at the price point that it was at this allocation is pretty degenerate. That those two just seem like a Ross Gerber, motivator. Like he probably talked to him and he was convinced. I think if it was up to Kevin, it would have been like higher Tesla or something. And then this next one is rather interesting because you're not going to be capturing any of the gain on the normalization of the yield curve.
Yeah.
It doesn't make any
Bro,
sense to have the
it's
ETF.
supposed to be an index fund, not a targeted date fund or it's supposed to be a mutual fund, but it's not supposed to be anything other than that. Like when you buy a targeted date fund, what you're looking at is you go, I want everything in my portfolio how it should be when I go to retire. Okay. Kevin is not creating that type of fund. I don't know why he put the US Treasuries in there. It's baffling.
This is a good question from Daniel. I've heard quick references to Jeremy not understanding price to earnings and doing it backwards. Can y'all explain what he said? I don't watch any of his videos. So wasn't us who covered it, or I don't know if I think Jay did cover it. I didn't cover it, but
No, Chris covered it.
Chris covered it for sure. Yeah.
Yeah. What he did was he switched it around.
He did earnings divided by price.
Yeah.
Yes.
Yeah.
Yes. Which is earnings yield, by the way, but
Yeah,
not
that's what I
price
was going to say. He calculated earnings yield. Didn't know that wasn't the PE, but yeah.
Yes. And he said something interesting about like the Jeremy's PE. So he created it. He created his own PE, but it's not a new invention at all. I believe it's just like earnings over enterprise value. So it's nothing, it's nothing you don't learn in like your first finance class.
Yeah, Jeremy is not clever enough to reinvent the wheel. What he did in there was just honestly a mistake. How hard I would hold that against somebody who wasn't charging people money, I wouldn't. But because that dude seems to think that somebody should pay him $20,000 for his shit advice, yeah, I'm going to call him out on that.
Oh, I agree.
It's like I'm way more forgiving of people that are just offering their opinion. Like, I think I was really fair to Joseph Carlson when I looked through his portfolio and I just said, I don't know what this accomplishes that VT or VTI or VOO wouldn't. That was my conclusion by it. I don't like that guy, Joseph Carlson. I don't agree with a lot of the calls that he makes, but I mean, I just look at it and I go, look, we're all going to make mistakes on stocks. So I don't really think hammering somebody is the most productive thing to do. But I do think hammering you if you're charging money is the most appropriate thing to do. Like this retard.
I love that way that was said. Like this retard.
I have no idea. Like they asked me on my subs asked me on my live stream last week whether I would interview Meet Kevin. And I told him I would if that's what you guys want me to do, but I have no desire to talk to that dude because it's just going to turn into him deflecting. When I try to confront him about his crap investing advice, he's just going to turn around and go, "No, I think I was right."
I mean, there's also this, but I don't think you I don't know if you want to get into that, but the Jet Day thing that me Kevin is selling.
Yeah. Yeah. I mean, that's another thing that's ridiculous, dude. Okay. First off, you bought a private jet. Echoes pointed this out perfectly when he said private jets are billionaire toys. But he's up there and he's doing his latest grift. Like, oh, you can meet with me and we'll fly on my private jet somewhere. Well, dude, you've proven over time you don't really know what you're talking about. Why should anybody pay you?
Mm-hmm. Charisma. I don't know.
I actually don't think Kevin is very charismatic, to be honest with you.
He has to have something for 2 million people to have clicked the sub button. If you're still subscribed to him and you're like hate watching him, don't hate watch him.
Yeah,
I don't
dude,
understand the logic.
Sub from him. Stop that.
If you're hate watching someone, that doesn't make any sense. You still help that person, by the way.
Yeah, it's like, all right, hey, Kevin, let me pay you $3,000 to take a plane trip with you for information on investing that I know is wrong.
Yeah. Yeah. What else? So there's that, but okay. So I have to ask this question before I forget to ask it because that's part of the let's say the content that we were talking about because we briefly did talk about Tesla, I guess. But are you buying any stocks currently, or any stocks in particular on your kind of interest list that you're kind of looking a little bit deeper that we can share with the audience here?
No, I'm going to be honest with you. I know that's a disappointing answer. I'm waiting to see how the interest rate hikes play out. That's not saying that you should. It's just what I'm doing.
You're kind of waiting for the interest rates to play out before buying anything.
Mm-hmm.
Okay. I mean, I think people are also. I haven't done the portfolio update in a while. By the way, if you're watching,
But Fabio, you have to factor in, my investing style, which is, I have to put $21,000 into my 401k because it's a tax advantaged account. You know what I mean? Like the advantages of that is so much that I would rather just max that before I bought anything.
Yeah, no, I agree. You want to make sure everything's in there first, and then what's left over throughout the year, you'll kind of do that. Which, speaking of which, I gotta actually remember to contribute, max out my retirement account, because we're now in the new year. So I don't know if I'm gonna space it out or just kind of just go all at once. Because I know Chris last year kind of did it all at the beginning, and didn't have any more firepower for the rest of the year. Based on how we're at, I think because last year I spaced it out and that was actually nice. So I spaced it out, but this year I might switch over the strategy, not kind of play around too much with it and just plug it in right now at the beginning of the year. Might look at deploying some things. I've been buying, you guys remember from the last live stream. I don't know if you saw it, Jay, but for everyone watching here, if you watched the last live stream, I did briefly mention some of the stocks I'm interested in. But I'll say for Jay, because it might bring up some conversations here. So I have been buying a REIT. And this is kind of people in the Discord community, they already know what stocks these are, by the way. So it's like no secret to them. I already see that Fuhat, I'm kidding, Fuhat. Fuhat spoiled one of them before I got to it. But yes, CRM was one of them. And there was also, oh, by the way, Jay, I also want to announce if anyone hasn't seen it yet, if you look in the description below, I have an alliance with another YouTube channel called Sense. And then so we're kind of making, I'm going on to their channel, making some content here and there and participating and kind of giving some pitches to them as well, their community. But CRM is one of them. And they actually posted a video on their channel. You guys can go check out. I'm going to make a CRM video too, but
I'll be
that
right back.
video's older. I think that video is from 2 weeks ago. So I pitched the CRM video that the capital mindset community, they get to see that video too when it comes out. And then they chose to actually make that one public on YouTube. So anyone can see it. So go check out Sense, and their YouTube channel, I think, is just Sense. I think they should be in the description. Anyways, so yeah, CRM is one of them. A REIT is another. The REIT in question is actually an office REIT. So I've been actually accumulating some of them, not the traditional REITs that I've been buying before. I have some in the speculative REITs like, MPW, but you guys already know that. Again, I'm kind of giving you guys a quick rundown before the portfolio update. And then another stock that I've been buying, CRM. And the last one in question was, what's the major one? Well, I think you guys already probably know that one. Another small cap that went from speculative to core holding. That one I'm going to keep secret for now. That one,
Yeah,
keep
I
secret.
mean, that's also actually a problem on YouTube. I mean, you don't have enough juice right now to ruin it, but it also comes down to like, do I really want to tell you everything that I'm doing? Because I kind of want to load up on this stock and then tell you afterwards I loaded up on it.
Yeah, that's what I'm doing now, because people notice that the portfolio updates have it's been a while since I've done one. And one, it helps me a lot because I don't want to do portfolio updates just willy-nilly. And also it makes me impossible to copy. Because I don't want to encourage that on Capital Mindset. No, I don't think you don't want to encourage that either. None of us want to encourage that in the Roo Rabble. That's not what the channels are about at all.
Yeah.
And so we're not offering like a trade alerts or anything like that. I discuss it with the community kind of casually, as much as they discuss with me what they're doing, because we're all like a community of friends, right? We're all kind of just talking, to each other and sharing ideas. And so that coming in that conversation, we talk about, oh, I bought this today. Oh, I bought that today. Oh, I'm looking at this stock. Oh, this stock's coming down. I'm buying. So I'll participate in conversation like that. And through that, they get to, we have those discussions. But anyways.
Well, bro, one of my, like with the whole YouTube thing where, people are just recommending individual stocks. Part of my problem with that whole thing is like they have no process. It's just it seems willy-nilly to me. Like I'll go on somewhere and somebody will talk to me about all the hype, and I'm just watching the video. I'm going, the numbers aren't jiving. Like I have a big problem with the people out there calling themselves experts, because I'm just going to tell you this. Warren Buffett has repeatedly said he's not a stock market expert. He's talked about how he's like, I don't know what the stock market is going to do. And you have all these people out there, they have no idea what they're doing. Oh, I'm a stock market expert.
Yeah. I think even if anyone claims like they are, it is kind of cringe, because like the stock market or business in general, it's constant. It's like a life of learning. So if you know a lot now, hopefully you know enough to know that there's always even more to learn. So it's a constant learning process. And even like, for example, I talked about this, like, even if, for example, you understand the current plumbing of the financial system, let's say you do know it, right? And you can make actionable decisions today based off how it currently works. Well, in 5 or so years from now, it might not even function the exact same way at all. It might be totally different, because the way I kind of describe the plumbing of the financial system, it's like a living and breathing organism that is constantly creating new veins and arteries in different directions. And so the system is always adapting, because there's like thousands upon thousands of players, and it's made up of very intelligent people who are all creating new and innovative financial products to navigate issues around the world. And so sometimes it is very overwhelming to try to think that you're going to know it perfectly every single time. So it's a
Well,
constant learning process.
well, I believe in, like, if somebody tells me, I'm pretty much an expert in this specific sector when I'm talking to them, and they know what they're talking about, and then they just break down the sector, I buy certain sector experts. But when somebody just comes on, they're like, I'm a stock market expert. I'm like, except you're not. Nobody is.
Hmm.
Nobody has mastered the entire. There's so many moving parts. It's like, I want to tell people, like, do you understand that investing is actually quantum mechanics at a point? Like, so, when they hook up the stock exchanges, Chicago or New York, just wherever you want to pick it, you have information leakage due to the fact that you have quantum leakage along that. So that means that, you do not have perfect knowledge of what's going on in the stock market. So that also means you cannot be an expert on the stock market. That's one of the biggest problems with it. Is like, there's no efficient markets. People argue over whether the efficient market theory is correct or the inefficient market theory is correct. The inefficient market theory is correct because nobody has perfect knowledge. It doesn't matter who you are. So therefore, it can't be that the markets are efficient. I don't know if that makes sense. I'm like 9 beers deep, but
No, it makes sense. I want to just represent for a moment the people who would push back on they'll say, okay, but efficient market hypothesis is not about the unknown, it's about the known. So you're right. It doesn't take away from your point. It's just a little bit of an asterisk. I'm just trying to, because someone's
yeah.
probably going to think that and want me to
Well,
say it.
there's always asterisks.
Yeah.
You know what I mean? Like I said a second ago, somebody could be an expert in a specific sector of the market, but again, they don't have full information.
Hmm. Yeah.
That's what we're doing as investors. We're trying to take in the fact that we don't have all the available data and then make decisions on top of it.
By the way, there's some real estate plays in your area that I'm participating indirectly through. Not like directly me under my name and stuff, but indirectly I'm participating in your area. Bay Shore.
Yeah.
There's some areas in Bay Shore that because I've been to that the city, the area a couple times, and so I'm familiar with it. But there's that area, that specific area of Bay Shore is a place, I'll frequent here and there. They got like the bars down there, the food down there. But yeah, so some of the properties there um, are being bought up, let's say, but indirectly. And so it's interesting. So because they're actually bought for basically little to no leverage, and it looks like the cap rates are pretty strong there. But other parts in that same area it's terrible. That area is the cap rates aren't looking as good as they once were 3 years ago. Man, it's insane.
Dude, I don't want to be involved in real estate in any way at this point.
No, it's tough because I'm being patient for myself directly, like kind of just waiting for it. I'll tell you this, because while you were, when you went to go take a break real quick, I mentioned one of the stocks that I am buying. It's a real estate company. And what I've noticed for a lot of the real estate companies, I'm talking about the REITs, you see their share prices, they've gotten basically ahead of the curve. They've responded. It makes sense, right? But they've responded a lot more rapidly to declining real estate prices than real estate prices. So basically they're projecting forward into the future much more rapidly this change in the real estate market or real estate sentiment, which makes sense. Much more liquid market. There's publicly traded stocks versus the real estate. It's far less liquid. But yeah, I mean, if that's any indicator of what's to come, along with all the other indicators that we talked about last year, we talked about, for example, even Wells Fargo was pretty bearish on mortgage lending. And they're, again, the top dog in that space as far as the big banks go. I don't know what to tell you. Plenty of signs for it.
Everything everywhere comes down to the price you pay for something. And we're coming out of a market where pretty much everything was overvalued. So all I'm saying is I think people are in for a bad time for the next few years. You know?
So this is a story that Fuhat wants us to talk about. BlackRock halts withdrawals from 3.5 billion UK property fund. Liquidity crunch.
We all knew this was coming.
Yes.
I mean, look, remember on the Ryu Rabble, dude, it's actually it's hilarious to me. Remember like back in June how we were talking about how the whole transitory inflation thing was wrong and they were going to have to raise interest rates to crush it. There you go.
I mean, I'm on a slightly different camp, by the way. I don't know if you want to get into that conversation about it, but
I think the Fed's going to pivot also.
Yeah, I think that they misinterpreted the data. So they far underestimated the supply crunch that happened. The supply crunch caused the inflation, but
I agree.
They're incorrectly responding to that, and they're using a lot of lagging data to determine what they do next, which is a bit of a problem. I've spoken to people who are kind of more proponents of what the Fed does, and they say, well, this data is the only concrete data we have. We can't act before we have the solid data to show us that this is happening. I'm like, all right, but then it makes it easy for those of us who are kind of already knowing what they're going to do because we're perhaps using, I don't know what to tell you, better data points. And some of those I share with the community on a daily basis when I receive it, and then I share with them like the charts that I kind of find very interesting regarding that. But we're seeing, for example, a lot of foreign entities kind of betting against what the Fed is doing. The bond market's really betting against what the Fed's doing, and there is a way to play it. I don't want to get too much into it as far as the specifics because I don't feel comfortable doing that on YouTube. But you can kind of use your imagination and kind of investigate that. And that'll be a good exercise for everyone at home if you want to investigate how you might be able to capitalize on it. Some ways more degenerate than others. But regardless, what we're seeing is the services sector usually lags the industrial sector by about 6 months on average. And we had content going in like July talking about the industrial sector really slowing down. If you actually look at a lot of the chemical producers around July, look at their stock prices. In fact, don't take my word for it. We're going to pull it up right now. I have videos on this, so it's already on the channel, but we can talk about it again. Actually, let's use Dow Chemical for this example. I think we've actually done a live stream and I mentioned this to you. So if I go over the 1 year, you can see here the June, July right here. This is around where I made the video describing what the market's kind of pricing in. So this is that slowdown, the market saying, hey, watch out, because in this case, the market's forward projecting what's going to happen into the future. And it looks really cheap. Yes, it does look cheap. Now, the market's going to try to forward price it again. So if it thinks that things are going to improve beyond, let's say, in the later parts, 2023, 2024, it'll start to reprice that too. Don't get me wrong. But right then and there, that's kind of what it was pricing in. And even though industrial, let's say, employment was still running strong, and in Canada, it seems to be still running strong, services will lag industrial by about 6 months. We started to see a lot of the layoffs for services like services and technology, stuff like that, because we have like the bedrock economy and then the additive economy, in this case of software. We started to see the layoffs start to kind of begin in Q3, Q4, 2022, which surprised me, by the way, because I was like, wow, that's faster than normal. And then again, I have some videos kind of talking about and I think it's towards the end of November, I published a live streamer video kind of talking about what's going to happen or what I think, just having fun, what's going to happen 2023 We're going to see more layoffs now. We just got the announcement from Salesforce today, and later today, already happened, we got the announcement of Amazon officially, 18,000. We're going to see more. We're going to see some from other big tech names. Just you wait.
Microsoft was already back in November.
They're going to do more.
Layoffs. Huh?
They're going to do more.
Oh, I know. Facebook, all of those companies. I mean,
yep. You see, this is the joke. Do you see the audience right here going phase 1, phase 2? Because we have a joke in the community that like, because we had phase 1 was liquidity crunch, right? So we went through that. We performed how we did in that market, and then phase 2, it's kind of playing the let's say the flip on this. The next part of like liquidity crunch. We call it phase 2. It's a joke, and then there's a theoretical phase 3.
There's also a phase 4.
There's also a phase 4. That's another.
We don't know what it is yet. We'll figure that out as we go, but it's there.
And then JP's jumping over to the last, potentially the unknown last phase 12.
Phase 12. We have no idea what happens in phase 12. We'll announce it when we're there, and then we'll all just kind of sit back and wonder.
Yeah. Yeah, that's the funny part. But yeah, just kind of picturing all this together. Services, again, lags industrial. And so we kind of saw industrial go first, services will go next, in terms of business performance. Now, that doesn't mean that we haven't already seen the bottom on some of these names. Like Meta might have potentially bottomed. Like that, you might have already seen the bottom on Meta. Potentially. I have no idea.
Yeah, I never liked Meta.
I know that. Yeah.
I think there's a lot of questions now, and just not a big fan of Meta. But you're right. We might have potentially seen the bottom for Meta, but I don't know, man. I'm just not really confident in these social media companies.
I feel you. I feel you. Like there are a lot of questions for a lot of people, and I felt like, for example, that broadly speaking, that's actually I think what presented the main opportunity was a lot of people had really concerning questions about the company, because we're talking about a different proposition, Meta at 200 versus Meta at my average cost now of $98 per share, and it got down to $85 per share. And by the way, I made a video really close to the bottom, but you know who made a video at the bottom?
Who?
One of your favorite guys. I want you to guess, because I can't just tell you with that smile. Come on.
Is it one of my favorite guys who's bad, or one of my favorite guys?
Okay, so I'll say it this way. He's not the best. He's not the best, but he's not the worst. I'm saying from how you think of him. And
was it Sven?
No, it's not Sven. Sven,
because I usually consider Sven to be about the middling.
Okay, so maybe he's a little bit worse than the middling. But he's not he's not a grifter.
Crap. I don't know. I'm drunk,
you kind of dog on his evaluation methods.
Is it Cameron Stewart?
No, he has no credentials, like a CFA or CPA. Doesn't have anything like that.
Bro, I'm drunk. I'm drawing a blank. Let me.
His last name can rhyme with something that you can pop. He got that name for a reason.
Dude, I'm drunk. What is
Bubble?
Oh, Carlson. Yeah, all right. Yeah. No, I don't think his advice is the worst, man, because I mean, I don't agree with him, right? When you look at a lot of his stock choices, I just think he overpays, but
let me pull up his video though, because this is actually you can't make this up.
This is all I'm saying about this guy. He's not the worst guy out there. That's all I'm saying about him.
No, I get that. That's why I was saying
Yeah.
it in that way. I was like, you don't think he's not a grifter, and you don't think he's the worst by far. You have some criticism against him. I thought he was like, okay, wait, so is he above Sven for you or below Sven for you?
Well, dude, Sven threw out some clownish evaluation of Amazon stock that I just don't agree with. And I'm like, bro, so let me tell you how I look at things. It's relative to what you know. If you're going to tell me that you're a PhD in finance, you better not be telling me to buy a company at, what was it? 20 times operating cash flow.
What company is this?
Amazon. Because
Amazon.
Sven did a video on it talking about how good of an investment it was. And I was just sitting there going, bro, if you have a PhD in finance, you should not be on YouTube saying this kind of stuff.
I will tell you this because I told the community this. I have a gut feeling this is the year Amazon will give me the chance to return it to its former glory.
Bro, I hope Amazon returns to its former glory. I just don't want to buy it right now.
Yeah. But I want to show you this because this
Yeah.
will blow your mind. Okay. So check
Yeah.
this out. So
All
2
right.
months ago, November 3rd, 2022. Remember that date, November 3rd, 2022. Let's go on Google. Let's go Meta. November 3rd, 2022. Go 1 year.
All right. All right.
What do you see right there?
Massive dip.
And what date? What is the date?
I don't know, dude. My eyes are
November 3rd, 2022.
okay.
So so he publishes this video. And from this video, by the way, he's actually done this like multiple times accidentally, I guess. But my God, like it's like perfect. So the
Bro,
community,
anybody that hits the exact bottom, no matter how many times they're doing it, they got lucky. But I like it.
well, no. He gets bearish at the bottom. That's the difference.
Oh, and then he turns around at the top.
Yes. Okay. So Andrew right here actually was the creator of this right here. So this is the GMM method, and it's actually a proprietary method, totally proprietary method to evaluate stocks, and it has accidentally worked for a decent number of stocks, by the way, and it has accidentally worked again with Salesforce so far. We'll see if it works. But so you take the it's too funny. So basically, you take the average between two investors. I'll keep it secret. I'll keep the other investor unnamed. We take the average of two investors' price targets, and then you once you take that average, that price point is the quote unquote fair value. But then you also need the other unnamed investor to be really bearish on it, and you also need this investor to be bearish on it as well. So you need that to happen. You also need to make sure that the other one isn't invested. So some key criteria have to occur. But if you take the average price point of the two, and by the way, this person has to go from bullish to bearish. That's important. The GMM was made by Fabio. Oh, you created the GM method. Okay. So then then I guess I created the GMM method. All right. And Netflix, yes. So Netflix followed the same pattern. CRM so far has followed that pattern. But Netflix scarily followed the pattern because we back tested it to Netflix and it worked. I'll tell you in excruciating detail exactly what the formula is, but it somehow worked. I'm gonna keep it private from YouTube just to keep it like mysterious, but it's nothing special. So what do you think about that? November 3rd, 2022.
What did he say though?
Oh, this is if you watch, I just tell everyone, go watch this video. So this video, it's basically him. He was bullish on Meta before, then he kind of turns negative on the company. He's not going to sell it. That's what he said. He's not going to sell, but he's not going to add any more to it. Even though his thesis was like X before, and now that the price is lower, his thesis changed from X to Y. And so he's not going to buy the stock anymore. But that was a legit bottom.
Yeah, I mean, dude, do enough stocks, you'll call the bottom.
How many times though, man? Because he
I
did
don't
the
know.
same on
Yeah,
Netflix.
yeah,
But
I
no,
don't
no, he's
know.
calling the bottom in not the way you think. He's not saying it's time to buy.
Yeah.
So like when he got net bearish on Netflix, he was bullish on Netflix at like $500 a share. And then it kept going down and down and down. And progressively, you could see his demeanor change with the stock to the point at which it got to, around under $200. And at that point in time, he released a video kind of saying why he potentially could have been wrong about Netflix.
Well,
The
yeah.
business,
I
not
mean,
the stock price.
yeah. I mean, it's the thing like I've said about him. Like, I don't think he's a grifter. I just think he makes stupid choices when he buys stocks for his portfolio. I think the dude overpays.
Mm.
Because I mean, there's a lot of techniques and there's a lot of weird techniques I could show on on the whiteboard for calculating the intrinsic value that takes like 2 seconds and doesn't involve like a cash flow. But I mean, I can look at Meta's financials. Yeah, I mean, my thoughts on the guy are that it's just I just don't agree with a lot of I think he overpays for most of the companies he's buying. I don't understand it.
I think he gets caught up in the story. He's a basically a purely story driven investor, and the analytical, I don't think he has like the knack for it, but
Yeah, I mean, because when I look at like this really weird thing happened. It's not really weird, but when you look at it, it was like all of a sudden when every stock was going up, these guys on YouTube were telling you, no, buy, 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 buy. Soon as it starts dropping, that's when they become bearish on it. But the stock is becoming more affordable. That's why I just don't get why these guys have the high sub counts that they do and people listen to them.
by the way, so Kingdom's actually saying hi to you, and he wants to. I want you to know that he calls you Benjamin Graham. He calls you Ben Graham. By the way, Kingdom wants to do. So I have two people that want to have a debate, and with Strongman, and I think you're actually another good candidate for this debate, like a tag team. So the debate is going to be structured around VT. I'm going to moderate. I'm not going to be participating in the debate. VT and dividends. Strongman already said yes. I'm interested to know because if
I'll do
Strongman
it.
gets a tag team partner, then I'm going to let 2v2 happen. Otherwise, I'm going to only let 1v1. Right now, it's set up that it's going to be Kingdom and Strongman. But if there is another person who wants to side with Kingdom, and in order for me to let that person on, I need Strongman to also have a partner.
Yeah,
Kind of
dude,
go.
I'm willing to do it.
All right, let's set it up. So then you just need to message me. You just text me like the days you're available, and I'll have to kind of coordinate with everyone for the 4 individuals what days are available. Then I'm going to release like a topics list. Everyone can kind of prepare their points. If you want to prepare, if
Yeah.
you don't want to prepare, it's fine.
No, I'll prepare.
All
Let me
right.
know, man. That actually seems fun to me.
It's
I
fun.
want to
It's a
see I
fun.
want to see I want to see what other people have to say. Cuz I mean, as much as I clown certain YouTubers, look, we all have a lot to learn here about the investing world and I'm extremely curious on other people's processes. So, I'm in.
All right. So we're going to set that up. So Kingdom, you hear that? So it's going to be you, Dan versus Jay and Strongman on the topics that we discussed earlier. So those are going to
Just
be all the topics.
throw me an outline of what we're going to do so I can have some idea of what we're doing.
Yes, correct. So yeah, that's definitely going to be the case. So the rough outline I'll tell you right now, so you're kind of already mentally preparing for it before I send it out. It's going to be kind of centered around dividends, index funds. It might be also including. I don't know if they want to talk about Baba or anything like that. But yeah. Also, Kingdom's asking if you're interested or you're looking interested at Meta.
Sure. I mean, look,
What do you
dude,
think?
I'm not married to my ideas. You know what I mean? Like when I started my YouTube channel, I wanted to learn from other people. So if somebody has other ideas about meta, good, let me know. I don't know whether I agree with you. Lay out your bull thesis. I might agree with you or I might not.
Now, the Amazon bull thesis, actually, I'm gonna plug this for you because you have access to it.
Yeah.
So when you have time, I have like a decent write up in the Discord in the investment ideas section. So you can go in there and you can actually I read up the. It's pretty brief. It's very easy read,
Yeah.
but in there I kind of break down the thought as why the business of Amazon in like the next 3 to 5 years is actually really interesting what they're building out. And I kind of go over like the master plan, clickbaity, but the master plan of Amazon as a whole, as to like kind of why they're doing what they're doing and how that kind of plays into the overall thesis. But just briefly mentioning or saying to everyone else, it's basically creating a very powerful ecosystem from which they can make money elsewhere, not from where people think.
No, I mean, that's the thing about Amazon is I just want to see how their investments pay off.
Yeah.
That's what I really want to see from them because I don't know. You know what I mean? It's just one of those things where it's like, all right, I'm just not sure about this company. I'll set it aside because I have other alternative investments. So
Well, makes sense. Okay, so kind of the last question, or a couple questions we have. Jay, what is your market outlook? All right, what do you think for 2023? It's just a fun question. It's not, just say whatever. Could you could say we're gonna double from here.
I don't think we are.
What do you
I
think is gonna
think
happen?
I actually, so one of the things I do is I will listen to people, that I'll listen to people, everybody's opinion, and then take it in and try and form my own opinion. I actually agree with Vanguard and a lot of the major investment houses that we're in for negative returns for a while. If you look at where we currently are in the S&P 500, what is it, 3,600?
Hmm.
I think book value is 1,000. So we're on the outer edge of fair value. I think we're going to trade sideways or down for a while. Again, I'm trying to predict the future. I don't know what's going to happen, but I'm going to throw that out there. I just think with the massive run up in the stimmy checks, just too much money was pushed into the market. I think we're going to suffer for a while, but it's not a bad thing because you're buying more and more equities and securities to put into your portfolio at a cheaper and cheaper rate.
I bought something else interesting. I was kind of this is one of the products I don't really mention on YouTube because they're like I consider them like alternative products.
Yeah.
Once we end the stream, I met people from the community already know what this is, by the way, because I already told you guys earlier today. But um, I wanted to actually run it by you because I feel like if we're going to find this interesting. So I'll answer this last question from Kithan Rahman. Question for Capital Mindset: thoughts on GEHC, General Electric Healthcare? I'd have to really take a look at it. It just spun off. My initial thought when I took a look at it earlier in the stream, which by the way we looked at it earlier in the stream, was I'm gonna kind of wait and see. I really do have to investigate further, and I think the market's also kind of feeling that kind of like wait and see what's going on because it just spun off. I'd have to really digest really what's going on, but it's not really the right time to ask me about it. Thoughts on biotechs in 2023? I'm new to the. Oh, you're not new to this stuff. Big Pharma show. That's like his main cup of tea, by the way.
But that points out a really good thing about investing. Peter Lynch talks about it in One Up on Wall Street. Everybody's got their own expertise from stuff they're into.
No,
So if you're an expert in the bio market because you're a chemist or whatever you do, man, that's where you should be going.
I just love the question, because if anyone doesn't know Big Pharma Show from the community, this guy's like balls deep into like, but that's his cup of tea. Like, that's what he's really involved with.
And that's where you should go with individual stocks. When I say like keep 90 to 95% in a low cost index fund, what I'm saying to you is that just outsources your brain. Now you can concentrate on the bangers. And if you know the biotech industry, that's where you should be.
We lost Jay for a second. Oh, there he is.
Oh, okay. Wait, did we go down?
Yeah, you went down for, like, you paused for a second. So you said that's where you go for the bangers. You've set your index funds to autopilot, right? That's the autopilot you said.
Yeah, that's what I'm saying. Autopilot this stuff, right, with your index funds, and then go to the sectors you know about. Like, I don't know crap about biotech.
No, I'm just still laughing just at the question, because it's like his name, Big Pharma Shill. Thoughts on biotechs in 2023? I'm new to this stuff.
No, it's hilarious because I think the guy's messing around. But I mean, that's what I'm saying. Like, if you know biotechs, man, why wouldn't that be the primary place you're putting your money? I don't know anything about biotech.
By the way, I pulled up the stock here for you, Jay, because you told us last time you were on here that you would buy the stock.
All right, fine. I'll buy a share. I haven't bought it yet.
Tisk. P ratio of 5, therefore it's a buy. So actually, I think you might be up. You're in luck. In the past month, they are cheaper by 5%. Okay. So
God damn it. I'll do a video announcing that I'm buying TA. One stock.
You need to profit from the post-degeneracy cycle. Truck stops. You need to make money from the truck stops. So that way, when Jeremy loses it and then he goes to the truck stop, you're getting the money. And
I'm pimping him out. I'm like, this is your comeuppance for buying Tattooed Chef and telling people to buy Tattooed Chef. You got to suck a lot of truckers' wieners to make that up.
Oh, I would be remiss if we didn't mention this. It hasn't happened yet. The pump hasn't happened yet, but look at this.
Bro, I know. Because this is what I thought the whole time. As soon as China opens up, Baba's going to run.
You know what's the fascinating part? So I was telling Chris, because back when it was $60, right? That's when I made my video, and I have like my really small position in Alibaba, because I still strongly believe everything I said before, and I will make content on Baba again once it's like at that point where everyone's kind of forgotten about the negatives. All right, then I'll make content, because if you notice, I didn't like spam out content when it was like super down, right? Because I could have been making content all last year on Baba, just like but now on the second tranche of buying, when I made the video and I doubled the position, I'm up, I think, over now. Definitely now, actually, because it was like 62. So that's 50%. So we should be kind of close to like 50 something, 60% just on the second tranche, which was the double up. But I'm actually almost positive now on the first buy, on the first tranche, which was early December 2021. And I think the cost basis on that tranche is like 109, 108. So we're getting really close to that. And that will be funny, ironic.
Bro, dude, the entire problem with Baba was the fact that the Chinese economy was shut down for the past 2 years.
Yes, it is not because of the risks that I discussed. That's why I kept telling everyone that is not priced in. That is not priced in. That is definitely not priced in. This is sentiment. And so it was a sentiment play. And some other, we have some traders within the community, and they actually participated in the sentiment trade because they agreed this was sentiment, and it was just trading on sentiment, not the fundamental risk. And all you could do, go back to the video I made in like March. This is to the audience watching. Go back to the video I made in March on Baba. It was about that topic, about whether or not it's trading off of sentiment or the fundamental risk. And it was trading off of sentiment. How did we know? Well, I made a claim or a statement about how, yes, it's trading on sentiment, and you kind of can see a movement if the government said something. I know that the very next day I published that video, the government came out and said something positive. I think Alibaba jumped 15% the next day. It forced me to make an update video the very next day, kind of going like, yeah, that thing I just said yesterday. Well, timing was somehow like, I don't know, she like watched the video and was like, oh, this YouTuber in the States with like 1,000 subs.
Bro, I mean, the whole thing on it was stupid. Where it's like, all right, look, this is an international company. Yes, I know it's in China. Yeah, I know about the VIE structure, but I mean, this is a company that's selling products around the globe. Do you think it should be trading at under 1.5 times book value? Because it was at a certain point when it was like $66.
Yeah, no, absolutely. I sorry, I got like distracted because I just got a notification. It's not related to anything we're saying right now. I hate to. So
No, do it. Throw it
you know
up.
the Bond King guy?
On YouTube?
Yeah.
No. Why? Is he
Well,
getting
someone just
busted?
sent this to me. Apparently, he just got divorced like just now, and he announced it on Twitter. Like, the heck? I mean, I'm not that kind of channel, guys. I'm not that kind of channel like tabloid, but I don't know. It's just like I'm just talking out loud what it was just sent to me.
Maybe him and Andrew Tate were talking about like being an alpha male, and he just decided this chick doesn't like bonds, so I'm out of here.
I just find it, I don't know, perplexing that it would be announced on Twitter and then it was sent to me because of it. I don't know. But I know that he's been doing some very weird and interesting. Oh, maybe that's what influenced it. I don't know. Maybe like the split on the money influenced him to take the agreements to get like 20K or something for pumping them. I don't know. But anyways, I'm not gonna. I feel like there you go. Yeah, Echoes, man. There's some stuff for you to do. Echoes, look at this because
Echoes,
like,
dude, honestly, Echoes has been crushing it lately.
oh, absolutely on fire.
Yeah,
Absolutely on fire.
dude, he's been destroying grifters. It's hilarious to watch.
Echoes dominates the thumbnail game. Like, my goodness, he dominates the thumbnail game. And by the way,
Well, yeah, dude, you want to know something funny? Echoes and I were communicating behind the scenes about how to make thumbnails, and I just came to the conclusion where I was like, bro, my brain doesn't work on this level. I just write dick jokes and do stand-up comedy and talk about stocks. I have no idea about the thumbnail game. It's not getting any better. No matter what I do, I can't get above of like a 12% click-through rate. No matter what. I go, that's a solid thumbnail right there. 7% click-through rate. And I'm sitting there going, I don't know what to do. That thumbnail looks good to me. Jeremy's burning down the house. Meet Kevin's in retro mode behind the scenes. I don't know what to tell you.
I mean, I'll make you feel better. My click-through rate's absolutely horrendous. You want to know what my click-through rate is? I think it averages like maybe like maybe 6%, 7%.
Bro, okay, so first off, you have no idea what it's like to go, I'm going to make a masterpiece of a thumbnail. And I sit there and I go through and I'll go, that thumbnail's brilliant. I love it. I love the way it looks. 7% click-through rate. I'm like, what the hell, guys? I put like 20 minutes into that thumbnail.
Yeah, no, that I kind of, I don't know. I get what you're saying. And for me, it's like I know that I'm not really very skilled at the thumbnail game, so I'll kind of just just go through it as quick as possible and then just put it out there. Because again, mainly for me, the YouTube thing is kind of just documenting my thought process over time. If people watch or they don't watch, it doesn't matter. I feel like looking back, by the way, I was actually going back through my videos, and some of the subscribers have been sending me some of my older videos, stuff for me to like re-highlight to the new audience, because there was some videos out there that really aged well. I think some of my macro videos aged really well. I'm going to start posting them in the community post for any new subscribers to actually watch if they want to. And then just keep in mind the date it was published, because some of them, I don't know, like February, March, etc. of last year, and then kind of think about what happened since then. But yeah, it's
Well, we have a comment down here. Echoes. I agree with you on that. My eyes don't see the same thing that you do. But Tano C is correct. J Nog, you got to bring back the stealth dildos. That's probably the main problem with my thumbnails, is that I had abandoned stealth dildos everywhere.
those are the part that was the masterpiece, just like looking
That was
for it.
that was the master stroke right there.
Yeah.
No, I'll admit, I'll freely admit, I'm terrible at that kind of stuff. The self promotion, all of that kind of stuff. You know, a lot of the guys that are biggest on YouTube, what they really are is just really good at self promotion. And I sit there and I go, yeah, I don't want you to take, like, when I throw out investing advice, what I want you to do with it is take it with a grain of salt and look at whether you agree with what I'm saying and then make your own decisions. But you have the guys like Jeremy and Meet Kevin that just confidently come on TV and they go, Tattooed Chef's going to be worth $30 trillion in 4 years. I can't do that.
Yeah, no, I agree. I agree. You don't want to. Well, I think it comes from the fact that this is how they generate their money. So they're self-promoting their business, they're advertising their
Yeah.
business, and the audience isn't like the audience. You're not part of any community. You're just the product. And so they're self-promoting because that confidence that they provide brings about, or it attracts a certain kind of person who's then willing to give them monetary compensation for the advertised product that they're selling, the dream that they're selling. I mean, even I don't think, well, we agree on this 100%, but because we both think that it's never going to end. Like there's always these newer guys even popping
Yeah.
up every single day, that are, it's seemingly getting worse in some cases, but also better in other cases. But
Bro,
I'm
it's
curious,
getting worse.
you think it's getting worse? Let's go.
I mean, you have all these guys, they're still pumping, penny stocks and stuff. Nothing happens to them. Their channels just grow. Look at alpha stock status.
Hmm.
All that does is encourage more people to come in and give shit advice, to be honest with you. I think what really needs to happen is there really needs to be a massive bear market that lasts for like a year and a half to get these guys out of the system so that people learn there's like actual techniques. You don't have to have one technique, not, you know what I mean? But as long as you have some sort of technique, you're going to do well. But the problem is these people just keep coming in and promising, unrealistic gains.
Yeah. Yeah. I mean, because like it's not, I don't think it's feasible to promise anything like a gain. Like if you're part of like this community, I'm not telling you you're going to make anything at all.
Yeah.
I don't think, yeah. And same with your community, or the Rue Rabble community as a whole. No one's promising anything. I've made the returns I've made, and I did pretty well last year.
Yeah.
Um, and that doesn't mean that, you know, you're going to learn like the secret sauce. I want everyone to like learn their own path and not just like say, okay, what is he buying? I just want to buy that, and I'll pay him. And by the way, it's not even something that's worth charging, first of all. I'll pay him to find out what is he buying, when is he buying, and then we'll go from there. That's I feel like that's cheap. That's cheap.
Well,
And
I mean, for me on my channel, what I'm offering you is just the way I think about stocks. I'm not
precisely.
saying I'm right, but I just want to offer some technique. Like my thing is, if you're going to play the game, just understand how to play it. That's all I'm trying to do. Like the whole thing is a play. It's a
Mhm.
dance.
Yeah.
I just want you to understand, take your dance partner when, you know, for lack of a better term, they're under fair value. My problem with a lot of these guys on YouTube is you're telling people to buy a lot of stocks at overpriced or fair value. Where's the return in that? Why are you taking this risk? The more you pay for anything is the more you pay for something, it becomes more unlikely that you're going to get your use out of it. I always use this example, the hammer example. You need to drive one nail into a wall. Well, would you pay $2,000 for a hammer if you had to drive one nail? No, you wouldn't. Why? Because it's unlikely that you'll get your value out of the company. Well, if you're paying 100 and whatever times free cash flow, it's unlikely you're going to get your value out of that company. Why? Because you overpaid.
No, I agree. I agree. Going through some of these questions here. So they want us to go over CRM. I haven't made a video on it yet. If you're craving CRM content, I'm gonna actually go and show you where you can find it. By the way, someone, this is kind of going into that. There is an unfortunate habit of people to kind of try to find out what price is the price I buy, and then that's it. They don't want to actually go through the full thing. So let me actually go into here.
Let me
Uh,
take a piss, dude. Keep talking. I'll be back.
no worries. So here's the video you can go to find, and it's actually me talking in this video. So you can go to Sense Invest and the case to buy Salesforce, parentheses price target. It was posted a day ago. However, it was filmed about 2 weeks ago. So you can go check that out if you want content like today, to listen. What do I talk about with Salesforce? What are my thoughts on Salesforce? But this is basically like the bullish pitch on Salesforce. I haven't made a video on capital mindset about it, but that will come, and etc. But yeah, point being that's it. Now let me go back here. So there's another question. How long till you start charging for the Discord? Well, no, to be fully transparent, there is a paid version. There's better a discussion to be had about when I'm going to be closing the Discord, which is probably more soon rather than later, because I want to control the growth of the community, make sure that it remains of the highest quality. And I'm really happy with its current size. For a channel of my size, the Discord's really big. There are channels that are much larger than mine, and their servers are much smaller. So because right now the way I have it, I really like it. I like that I know a lot of the people by name. I know a lot of the people's voices. We all know each other. It's very, tight knit, and I like that. I think there's a lot of value in for myself and for the people in it right now. So kind of maintaining that, there's a better question we had that I've been thinking about it, and members of it, current members know that I'm probably going to close it and change it to an invite only Discord server, which means there won't be a public link anymore. And only current members will be able to recommend new members. That might be something I decide I'm doing. I'm kind of playing around with the idea as to what I do. It also controls it keeps the activity bearable where it's still providing value. Because one of the issues with like a Discord or something like that is, you'll type something, like I'll type something and maybe it's value, but throughout the day it just gets flooded. And then people who log in, maybe at 5 o'clock, well, they don't see what I posted. So you see what I mean? Like they'll see just like a flurry of text and, they won't see it. So kind of, I had to create newer channels to kind of, push traffic elsewhere. But yeah, that's kind of been where we're at, but that's about it. Okay. So, and then some more questions, but I already answered that one about CRM. Oh, I do, I think, talk about it in that video. If not, I am going to be talking about it in the video I make. But yeah, I'm
Hey,
not going back to
Gil's
buying.
got a question down there. I like Gil, despite the fact that he did not like me for a while.
What was his question?
Can you save me a spot when I make a Discord?
Save a spot where?
That's what I wanted more elaboration on.
Yeah, save a spot where? Awesome, cool to see the collab. Good there. A lot of people don't want to. Yes, I agree with this. And this is also true because we saw, the interview on Strongman's channel, which that individual is a member of the CM Discord community. And honestly, like a lot of that stuff we already were talking about way back when. But yeah, the insights into, I feel like, the CM Discord also was inadvertently, it became almost like gathering grounds of like, I don't know what to say, but like former fans of other creators that kind of were like disillusioned with them, kind of gathered all together into like one community, or have experience with other creators communities. But yeah, that specific Discord, like the Jeremy Discord, it's very interesting. I think he charges like $20 per month for a room, by the way. A room. What, like, oh my goodness.
Wait, so how much does Jeremy charge a month?
So he's charging about $20 per room. So if you want to get access to the Tesla room, you got to pay him $20. You want the Palantir room, you got to pay $20 for that.
I have no idea why you would pay that guy anything for any advice.
Yeah.
Salesforce. I'm looking at it. I might do a video on it tomorrow.
Yeah, Salesforce, I'm already not buying it. It already it
I wouldn't buy it.
It already escaped me. But I've already built it up to the position where I'm comfortable, and that's it. I have the like my own evaluation model that I actually plugged this Salesforce through, and it actually came out with some interesting price points that I think I discussed in the video I shared with everyone just now. But yeah, there's a price point where I was the most interested in it, and it hasn't gotten there. But that would be the price point where it would get to a really decent size. But yeah.
Is it about? Yeah, I don't know. I'm gonna look at it. I'll probably do something on it at some point. It's it's actually really difficult for me right now to do a lot of videos because I'm just celebrating the fact that, Jeremy's getting crushed. Meet Kevin's getting crushed. All these guys that were grifting during the pandemic. It's just rewarding to see them to get destroyed.
Yeah, but no one could have predicted that, Jay.
Not at all.
No one could have foreseen that coming. No one saw that coming. No one could have ever thought that that would happen.
All right, brother. I'm pretty drunk. I'm going to get out of here.
All right. No worries, Jay. I'll be seeing you around. I'll stay around for anyone's last minute questions, and then I'll close it off.
All right, brother. Love you. I'm getting out of here. We'll talk in the future.
Peace. You have a good night.
You too, brother.
All right, ladies and gentlemen. So I'll stick around for a couple more minutes, see if anyone has any last minute questions you want to ask me, and then we can discuss that here and there. Okay, so Kevin hasn't even used that jet once, I bet. I don't know, maybe. So this is actually something that someone brought up to me. Actually, you're here right now, and which was interesting. So this is actually another interesting point what you're bringing up here, Andrew. But the potential that it's not for certain. We have no idea, but it would make sense that Kevin owns the jet through the Pathrath organization or whatever. Thing is like the media group that owns the YouTube channel, and then he's using it for the purposes of House Hack. So it would make sense that House Hack is paying the expenses of the jet because it's like leasing it out basically to House Hack, and that is a way, while not ideal for the investors of House Hack, that Kevin could cover a lot of the cost of the jet using the funds collected from House Hack. Unknown if that's the case. Okay, so yeah, I'll say it like that. I don't have one. There's too many. There's too many of you that are near and dear. Too many that are near and dear bacon. But let's there's probably like there's some that I know more than others. I'll say that. There's some I know way more than others because there's some of you that are much more interactive, etc. I think you guys all know I shared with you guys like the leaderboards in terms of activity, and some of you are like nuts. I'm just like, you guys, what are you guys doing? I mean, it's good. It's good. Andrew, Fuhat is your favorite. Fuhat makes an impression on everyone who joins. First of all, you'll question the meaning of cap. That's usually like the first thing that happens, and I'm not joking by that. Actually, someone did receive a text message or Snapchat from their friend who just joined the server, quite literally doing that thing, like asking their friend who was already in the server, what does he mean by cap? And so that's usually like a very, I don't know, inside joke now. The duality of cap, as Fuhat calls it. He calls it for that reason, because you're going to be like, I'm pretty sure that's not what cap means. And then he'll say something to the tune of, well, do you understand the duality of cap? And then, you'll start to think a little bit more, stare off into the distance, go like, huh. And then, continue on your way. But yeah, let's see if anyone else has any questions. Can you talk about the investor write-ups blog benefit in the Discord? JMac, what do you mean by talk about it? What would you like me to speak on it? Just in general or something specific about it? Any good YOLO plays this week? My goodness. All right, just for fun. Like, wait, what's the time frame? 1 week? YOLO plays. Oh, man. Absolute degeneracy. Let me think. Yeah, like this is degenerate. Okay, so yeah, definitely don't do this. But I don't know. Let me think. I don't have any YOLO plays. This week I don't really have any YOLO plays, but you maybe taking like the reversal, maybe like on a temporary reversal on Tesla, but like that's super degenerate. Just like on that sentiment, maybe like ride up like a little bit of a bounce there. I don't know. I haven't really thought about it, but good question. Good fun question, I guess. Let's see here. I'm trying to get in the Discord, and when it asks for my phone number, it just keeps loading. That is unfortunately Discord itself. Yeah, that is unfortunately the Discord itself. And then Bob Smith says Salesforce has jumpy profit margins. I think that's just depending on, are you fully accounting for each of the line items and kind of normalizing it? Because I think that's what is missing there. Okay, it's kind of catching up to everyone else. Can you talk about the? Oh, I already asked that. So my follow-up question was to you. Okay, let's see here. Capital Mindset. Is it an actual website outside the Discord that people get access to, or is it more like a room inside the Discord? Well, it's a part of the many rooms that kind of comes in with the membership of the Discord, and it's like a library of blog posts that either I or other members write investment ideas on, and people then share. So, and then it has like a search function. So you can like search for ticker symbols, and it provides like the write up. It brings it up, I think, from newest to oldest. I think that's how I have it set to sort, but it sets from newest to oldest. And yeah, but the purpose is to kind of share amongst the group members like what some ideas are. Again, it could be written by me, it could be written by someone else, and I either write something in addition to someone else. But the idea is people kind of come together. And I wrote 2 write-ups today, and I think like I'm looking at one of them right now, and I see people are already sharing additional information underneath my write-up. So that more people who read it and follow it can kind of go. And then the way it works is like you click like the follow button, and basically if you're not interested in a particular stock, you basically just don't follow that write up. But if you're interested in that stock, you click follow, and then it lets you know when there's like an update to that write up. But yeah, so good questions. But no, it's not a separate website. There's no separate website for Capital Mindset. There was one, but it was like where the blog posts were originally from Austin and I going to be hosted, but it's too complicated. It's better just to have it all hosted here, and Discord's a great host in general. Discord's actually working on some really cool things, like eventually video hosting is something it's going to have. But yeah. So thoughts on ICE? Man, I know that we were talking about ICE, International Continental Exchange, by the way. Dang, overall, it's another way to play some of the themes that we were talking about. But I mean, I have the capital that's coming in. I'm just redeploying it into the names I'm currently deploying it into. So it's more of a constriction of capital than I have on myself, I guess. And then other things I want to buy. So that's why it's not making the cut. Yeah, but prelim look, when we were discussing it, it makes a lot of sense going into the themes of this year, how it could actually work in that way. I think I just got added. What did I get added to? Responses. Oh, okay. I'm seeing some people actually join in. So, by the way, this is maybe a good place to ask if you're already trying to join or whatever. It should actually prompt you with like a video or something, where it basically lets you know how things work. Because before it was like a black box, and we're just like, yeah, you figure it out. I felt like that was a bit too ruthless in terms of the process for allowing people in the community. So I created a video that hopefully, and let me know if you're watching this and you were the one who just answered the questions I see. I won't say your name for privacy, but you answered yes, yes, and Costco. If that's you, let me know if you were sent a video through Discord, because it should have happened. But that's like an instructions video, and it helps out, with at least letting you know. Because before I would give people a tour manually, or the interviewers would give you a tour manually, but that video is basically the tour, and it kind of automates that. All right. So, anyways, you've got a great YOLO play this week. I mean, yeah. I'm typically not really the YOLO play type, but they can be fun. Yeah, when they happen. There is like a degenerate play that the Discord knows about, but it's not like a YOLO play. Because when you say YOLO, it makes me think like you put a significant amount of capital into it. It also makes me, for some reason, think shorter duration, but I don't think that's necessarily the case. Can't get a good read on U-Haul, thinking about getting in. So the thing with U-Haul is I don't know how much of the real estate they actually own. I think a lot of the real estate they lease, but then they sublease it almost. So like, I'm not sure how their storage business works, because they have a storage business and then the truck leasing business. I'm thinking that the storage business, I want to actually investigate further into that and see, do they own the real estate and then rent it out? Or are they leasing the real estate? Because I know some companies like WP Carey, which is a REIT, and I'll put their ticker up here. So WPC, little known REIT, very high quality, by the way. Not really a high performer over the past decade or so, but quality it very much is. Okay, so this is a high quality REIT. But if you look at their highest tenants, which again, just go on their website, you'll see U-Haul is one of the larger tenants that they have. And so I'm wondering, is that the storage facilities? And then U-Haul is then subleasing out to the customer, but WP Carey owns it. And so that's how WP Carey maintains like a triple net agreement. And WP Carey runs it U-Haul runs it for them essentially. And that's kind of how WP Carey technically has exposure to self-storage. I don't know. Maybe that's the case. Nice, Ethan. So I just saw this, Ethan. So, hey, Fabio, thanks for recommending the Handshake app a while ago. I got my offer lined up after uni. You see, amazing. By the way, if you guys didn't know, I used to have a business where I actually helped out a lot of clients with their classes. I was a tutor, and then I helped them to get into universities. And so that's just a quick advice I would give to anyone for free. Just know the resources that are available at university. And also, like, for example, the Handshake app is a really good place where a lot of recruiters are actually going to look out for fresh graduates from university. If you're a university student right now or just recently graduated, what are you doing? Get that app. Not sponsored by them. It's a free app. Put in all your credentials, everything you learned, everything you've done, and then start interacting with all the recruiters. And trust me, they're all on there and they're looking for you, and they're going to be looking for those keywords. And then you go to their events, etc. And then before you know it, you'll have job offers. And there you go. That's quick advice that they don't advertise enough. So I'm so happy to hear that, Ethan, and really happy to hear that you got a job. So yeah, that's why you're subscribed to Capital Mindset on TikTok. I don't, yeah, that's just a joke, because those videos, how they are. What did I skip? PLD and DLR questions, sir. Where did I skip it? Sometimes it's accidental. But what DLR, what are they again? I always forget DLR. I know PLD. Oh, Digital Realty. Oh, these are two REITs. Yeah. So Digital Realty, very competitive space. The best of breed in this space is EQIX or Equinix. And the PLD is the best of breed in the industrial warehouse space. But you have, Digital Realty Trust. A lot of people like it because it's higher yielding. But I think I'm not saying it's a buy, but this is Equinix, right? Equinix. You can see like the reason why Digital Realty is more popular among retail investors, it has a higher yield, etc. But Equinix has been by far the better performer, and still over the past 5 years has outperformed the market. And if you include dividends as well, even better. But Digital Realty Trust, I think over the past 5 years has underperformed the market. Remember that with REITs, it's really like a snowball effect. The more expensive they trade, the better access to capital they'll have. The better access to capital they'll have, the more access to deals that they'll have that the other ones just can't afford as easily. So it really does snowball with REITs, especially since they use a lot of equity to raise capital, etc. So stuff like that. But anyways, someone's asking if bacon is CoffeeZilla. I should tell my brothers to get, yes, you need to, especially if you're watching this live stream right now and you're hearing about this application for the first time, you didn't know it existed. And if their schools are not doing a good job at advertising this to them, they should really be doing this, whether you're out there, you're a current student, or you have a child that's in university, or you have a sibling that's in university, they better download this app. The sooner they do it, the better, because there is a limitation to after the point where they graduate that those recruiters will no longer want to recruit them. That's company by company policy, just so you know. But for the majority of them, it ranges between minimum 6 months, and then some of them extend it for a year out, 2 years out. I don't know, but like a year out. It's just general policy. But yeah, just do that. and they make it super easy. It's literally like so usually what they'll do is campus recruiters will use Handshake, and the already, like, let's say experienced recruiters, we're looking for experienced hires, they'll use more LinkedIn. So I think in a lot of universities that they'll tell you to use LinkedIn, but it's like, a lot of the campus recruiters are using Handshake. Have a LinkedIn too. You should have a good LinkedIn, et cetera, and blah, blah, blah. But Handshake's where it's really at for campus recruiting. And then when you're more in the experiential side of recruiting or experience hire recruiting, LinkedIn. But yeah, Handshake, best app for students, honestly, to get a job. One word of caution out there, because I know you're not asking about this, and this is not what this channel is really about. Although, because it is my channel, and I decided I do want to make content that is valuable to people, I will make some content kind of going over that, so that there's at least my version or opinion on certain things that if someone finds helpful, just kind of going over stuff like that, stuff like tips and tricks for, like, let's say academics, to help people out. And and also kind of through that academics, how to kind of translate that to maybe, making some things easier to land a job right at college, stuff like that. So yeah, it should be good. Yeah, but Handshake, Andrew, definitely tell your brothers to do that. Okay. I talked about JEPI. No, very briefly, but just I think retail investors overcomplicate their investing approach by trying to include all these complicated or more complex investing products like JEPI and some of these others, covered calls, ETFs. In reality, I think, like, sticking to more proven conservative approaches, like even just maybe like dividend ETFs like SCHD, is perhaps going to be better over a long period of time rather than something like JEPI. Just overcomplicating things, I think, is unnecessary for the average retail investors. But retail investor, the newer ones, or even some of the older ones, they do get attracted to yield. Yield chasing is a real thing. And I feel like that's an unfortunate consequence of JEPI in a low yield environment. So, and kind of same thing with, I think is HLI the other one? Oh no, Houlihan Loki. Oh no. This is actually a business that I would actually be down to work for one day. But boutique investment bank. But yeah, they mainly actually focus on restructuring. So that's kind of what they benefited from during the pandemic, by the way, which a lot of restructuring consultation and investment banking deals. So really good on there. But no, I actually like this business. Not many people know about this, Ethan. So glad you know about this. I didn't remember their ticker, but this is a company I was looking at way back in the day, and I did not pull the trigger. The gains weren't like incredible where I'm just like kicking myself for not buying, but they were pretty good. So I wasn't looking at it back here, by the way. I was looking at it around like this price point, and then it ran up and never looked. I never bought it, but whatever. We did go over Fidelity a little bit. We never went over Ulta, so I'll go over Ulta. Yeah, Ulta Beauty. Oh, comment right now. This is like a vote for you guys. This is how we're gonna do it. Very off the cuff here, but vote if you guys want me to do live streams where I do like a live stock analysis, but I do it in, yes, JEPI is an options ETF, by the way. So Kyle, yes, it's a covered call. If I remember correctly, I think it's the JP Morgan covered call. But anyways, so the question is, do you guys want me to do a live stream where I do like a more focused analysis and I don't take many requests, because if I take too many requests, I won't be able to do a focused analysis, and we'll do like live analysis together. Let me know if that's something everyone's interested in. It won't be like crazy deep dives, because you can't do that in like an hour, or 2 hours even. But it will be like more than just kind of me giving my quick thoughts. If you guys want that, what is a good day for that? I'm giving you guys who are participating in this live stream a lot of power, so keep that in mind. You already know I'm going to say yes. Okay, so you guys have a lot of power. With great power comes great responsibility. So you guys get to vote on, not vote. It's not like a, although I know I can actually probably put a poll here. Let me see. Poll. Let me add a poll. Participants, pop out chat, send feedback. No, I have to go here. I'll just add a poll here. Customize channel. I'm gonna go to content, live. We'll do that. And I think I can add a poll here. Boom. Start a poll. Oh, wait. What is this Q&A thing? Wait, I didn't know you could do this. Hold on. Oh, people. Okay, so it's me asking everyone a question. All right, start a poll. Live stream with less stocks, but more focused analysis. These are going to be more boring, because most people are not going to want to stick through, let's say, if a stock they're not interested in. So it's going to have lower view count, but I don't care. So we're going to do that and ask the question, and we're going to see what everyone says. And let's see here. Let's see if it shows up. Okay, so we're going to have, okay, so far it's like 100% yes. I expect this to be 100% yes. I'd be surprised if I got any no's. But if I get any no's, okay. So far it's 100% yes. How many people, does it tell me how many people answered? It does not. Oh, no, it does. There it is. So we have 6 votes. This is cool. I'm going to do more polls. I like this. I'm going to start polling people. Oh, we got a no. Oh my God. We got 1 no. All right. Whoever did the no, you're a funny person. All right. Yeah. Someone answered a no. Yay. Someone's going against the curve. Against. Oh, it's definitely the AR9. It's definitely him. No, I'm just kidding. But I would start the best companies like Palantir and Curate. I joke. Will you grade us if we choose the wrong one? No. There's no wrong answer. Was Fabio's wife that answer or no? Maybe she was. Okay, you were really a yes. But yeah, laser tech stock. Japanese semi company. I have no thoughts on that company. I don't know anything about that company. Laser tech, no idea. I'd be like shooting in the dark. Japanese company, probably really well capitalized compared to peers, much more conservative balance sheet. Before I even look at it, be my guess. Really, the analysis would have to concentrate on like what technologies are they addressing? Are they addressing any solutions, etc. The no was a true contrarian investor. Yeah, that's a good way of putting it too. So Dan's comment is actually a good one for you, Kai, by the way. So read this one. I'm going to put it up on the screen, and then let me see how many votes we got in. So I think it's basically overwhelming, yeah. So then I'll end the poll, and then my next poll would be what day? And let's do. Actually, it's not going to be weekly. I'm not going to ask this question because I can't do weekly commitment for that one just because of everything that's going on. So that one will just be a live stream that we end up doing, and then I'll just go off of what people are asking. But I won't accept everyone's request on those just to keep it more concentrated. But that's just how I'm going to have to handle it. Okay, so any last minute questions? Otherwise, we'll close off the stream. But it's been a good stream. I think we've been streaming for 2 hours and 30 minutes. Pretty good. Pretty good overall. There is a lot more, but I can only type so much on Jeppy. But no, I think that gives like a good little description. But my point, to keep it short and simple on Jeppy for Kai, was that it's one that a lot of retail investors get attracted to. And I think retail investors tend to overcomplicate their portfolios a lot, like a lot. So if you're looking for that income, there's other ones that are just simpler. You don't have to take any outsized risk or uncertainty risk or anything like that. Jeppy saw a huge inflow this year. I wonder why. The yield is mouthwatering. Don't fall for that. Don't fall for that. So, like, for example, I probably am not going to get any, let's say, pushback on this from the community in here, but there's members of the community that will say, hey, look at SCHD. You can't really go wrong with that one as a dividend growth investor. There's an index for you right there. And then there's a Vanguard equivalent. I agree with it. And I don't think anything's wrong with that. And again, I'm not going to be the guy that's going to, shout down dividend investors at all, because I am more of a believer of everyone needs to find their own style that sticks to them, encourages them to keep investing, and it makes sense to that individual investor. Not everyone should follow the same strategy. My strategy doesn't work for the guy next to me, and that guy's strategy doesn't work for me. We all have to find our own way. And then when we find our way, we stick to it. And hopefully that's the way that we get excited to invest in, and it keeps us on track to achieving our goals. So dividend investing might be for you, right? It might not be for the other guy. Index investing might be for that guy, but not for the other guy. Arguably, dollar cost averaging and low cost index funds is the best risk adjusted approach for most people. But some people are not going to, they can't behave in the right way where it's going to be successful. They're going to do the wrong thing. So like a lot of index investors, I think the study goes that even index investors underperform the index because they'll still play around with the money. So the average investor, unfortunately, still does bad because they're not doing it the right way. Buying high beta stocks at the top is my strategy. Oh yes. Yeah. Someone's trying to, you should get the, I was going to make a nerd joke. I'm not. All right. Thoughts on Apple? Too expensive here. Or no, that's a different one. APPL. That's, I think, is that Apple Hospitality? No, that's a APLE. I think you meant AAPL then. So Apple, yeah, a bit too high for me at this stage. Even though it's come down, it's still a bit too high for me. It's basically just a buyback story with very minimal growth. I'm thinking this Alta as a buy. So yeah, I had Alta in front of me, but I wasn't doing anything. So I'm not too interested in Alta Beauty, even though a lot of people really do like the business and the business model. No real disagreements there. It's just not my cup of tea. I'd actually prefer to own Sephora through LVMH for very much the same reasons, but LVMH, I'm kind of getting the conglomerate experience. And I get, Louis Vuitton, Hennessy, et cetera, all these luxury brands. And then in that, I get Sephora, which in my opinion, in some ways has a better customer relationship with their customers. But the thing is, you don't have Sephora trading in isolation. You have Sephora trading part of a large entity. So it's really difficult to kind of capture and measure the success of Sephora, unlike you could do with Ulta. So think of Ulta, but inside of a larger company, you got LVMH. And that's a business I'd definitely be down to buy. All right, seeing more questions here coming in. My strategy is to make my own ETF, basically 10%. Yeah, someone's definitely made that. Thoughts on Microsoft? I'm not a fan at like current levels, but love the business. So definitely would be buying. I mean, you know how I am. There are businesses I'd love to collect, and when the opportunity presents itself, oh, I do pounce, and I do. Hey, more money. I've been seeing actually your channel recently, and if you want to actually come on the channel or do something together, let me know. We can definitely set something up. I saw you on I got introduced to you through Strongman Personal Finance, so let me know. You can message me on whatever channel is best for you. My email's in the about section, but yeah, let me know and we can set something up. Okay, so thoughts on Archer Daniels Midland. I don't own it. My wife owns it, and it's done really well for her. So, yeah, kind of biased on that front, but I'm not a big fan. I don't think she's a big fan of buying it right now. I think she's sitting at easily over 100% gains, easily, because she was buying at sub 30, and then buying in the 30s and kind of averaging in, and then it kind of just mooned at some point. But she's basically just collecting the dividends, and I don't even think she's reinvesting the dividends. She's redeploying it elsewhere. So right now she's actually rounding. We just had the talk. She's actually buying some REITs as well, and she's buying some beaten down blue chip names here and there. I think she's actually, because she loves the store, she's actually buying Target. So I do own Target, therefore through her. Trying to remember everything else she's buying, but we try not to overlap too much our buys so that we do have a bit more diversification as a couple. But we do have, the stock talk here and there. So hey, yeah, no worries. Yeah, I'll be looking forward to that. How you doing? Morning. Oh, we're getting the Europeans waking up here. Thanks for the stream. Looking forward to seeing you on Sense Invest as well. Yes, so I think we're doing something tomorrow. So then that's gonna be the pitch. And Ethan, if you're from there, I'm juggling which one to pitch tomorrow because I have a couple, and I don't know if we have time to do all the pitches, but yeah, if I don't mention it, because I had this pitch set up like 2 weeks ago, but I didn't have time, so I only pitched Salesforce. But yeah, there's like a couple in the pipeline that I can get through, but yeah. No, I did not say that. No. Thoughts on Enphase right now. So Enphase, I had some interesting discussions recently, like not too long ago. The Enphase potentially, I'm not a short seller. I don't really short stocks, but there could be an argument there that Enphase is extremely overvalued, and kind of how adjacent businesses are doing and reporting. I'm not bullish in general too much on the company as a whole. I'm not an investor is what I'm trying to say in the business, but man, I don't know. I feel like there's going to be something coming up soon. Let's see how what happens. So like mark that down, I guess. And just for fun, we'll see how Enphase does. But that's kind of my opinions on Enphase. Like you're pricing in a lot. It reminds me a lot of Tesla back when we made the videos in February on Tesla. So we'll see. Let's see. Did you ever enter into the Albertsons workout type position? No, I did not. I did not enter into the Albertsons position. That was actually when we analyzed it way back in the day, was kind of the interest of my co-host Austin. I was more of the fan of Ingles Markets. I don't own it anymore, but that was like my play, and I didn't want to add another grocery store. But I think over that time period that we discussed it, Albertsons did well, and Albertsons is being acquired. If anyone remembers, being acquired by Kroger. They did a special dividend, etc. But yeah, gets good deals. What is this? Oh, you're talking about. Oh, that's a great deal. Okay, so you seen TPR? Is that Tupperware TPR? Oh, sorry, I spelled that wrong. TPR. Oh no, that's Tapestry. Tapestry. Oh, getting rusty on these tickers now. Look at this, and then don't have them all memorized. Oh wow, the special dividend is being blocked. Okay, I'm gonna get to that comment. I just saw the comment come in. Wow, I haven't paid attention to it. Oh my gosh. Wow. But anyways, yeah. So Tapestry, what's the question? You seen Tapestry get back to 52-week high? Thought it would be down. Yeah, well, not necessarily. I mean, 52-week high. I mean, look at that dip in 2020. Will it get back to there? Let's go in the 1 year. I mean, yeah, it's at the 52-week high. Not right now, technically, but it's gonna get there. Yeah, not necessarily. I mean, I'm not. By the way, if you're new, Kai, fashion stocks, not my thing. So always fashion stocks, not my thing. Like the only ones I'll touch is like the top of the line luxury companies like Hermès and LVMH maybe, but like, not my thing. But so I'm kind of more like, oh, that's interesting. That's the extent of my opinion, you know. Oh, no. No. So APLE, I'm not really a fan of some of these hotel stocks. Although I did make an alternative asset play and something adjacent or akin to that. I'm kind of debating talking about it on YouTube or not. But yeah, for in general, I'm not really a fan of hotel REITs. Not all hotel REITs, but like in general. And APLE is kind of one of the ones that I'm kind of on. So, but yeah, it's kind of my quick thoughts on that. I think they're a monthly pair too, and I believe that's another reason why retail sometimes flocks to them. Let's talk about it. So, APLE, I think like yeah, you can kind of take a look at since its IPO, it's down. So like all returns have been from the dividend. But let's go to the website real quick. I want to show you guys kind of some of the thought process you go. So like with these hotel REITs, they have the brands, and really the brands have basically all the money making capability, right? The hotel REITs, they own the land, they own the building, and then the brand company like Hyatt, Hilton, IEHG, Marriott, all of these, they make all the money in reality. So you really want to buy those guys at the right price. Because my goodness, they just print money. And if you recall, Bill Ackman during the pandemic said Hilton's going to zero, right? Well, while he was telling you guys that, the retail investors, he was buying it up, right? Remember, he's doing the best thing for his investors. And had I had a YouTube channel at the time, I would have told you guys or made content talking about how don't always listen to the guys who go on CNBC. By now, you should know that. So if next time that happens, because it will happen again, be careful when they say things and do your own analysis separate to what you hear on CNBC. Remember that they're not incentivized to tell you anything because they're not making money off of you. You're just investing your own money. They're going to do what's best for their investors. And so their investors are going to get what they really think. So anyways, so APLE, you can kind of go through their hotel portfolio, hotel brands and hotel maps. So sometimes I think they have a lot of hotels, so they're not going to show you like a list. Some of the smaller ones are going to show you like literally the list of their hotels, and you can kind of go over them. But what I wanted to show you, and just so happens that I've researched a lot of these REITs in the past, so I still have them not fresh in my mind because it's been a couple years now. I mean, I think at this one, I analyzed it and came up with like basically an avoid opinion. I think like four years ago at this point. But yeah, back in the day when I first did my initial research on this company, the conclusion was they don't really own attractive properties in the best locations. They're kind of more like they're not the worst, but they're not the best. And I'd rather find the ones that are like of the highest quality, best location possible. So if I was gonna buy and you're forcing me to buy one. Another thing that was kind of weird or interesting about APLE at the time was I didn't really like the cap rates they were getting the properties at. And I felt like their debt structure was a bit wonky. If it was APLE, if I remember it correctly, it was them. But yeah, so generally, I don't really have any positive things to say about APLE, um, Apple Hospitality. I'd kind of focus more on higher quality ones, but they are one of the bigger players. I think like yeah, their market cap $3.6 billion is not. They're not one of the small. Well, they're not the biggest by far. I think that's Hotel Parks and Resorts, I believe, is the biggest, but they're not one of the smaller players. So there's some other ones like I'll just name one that's like a luxury one or luxury focus. You have Hersha Hospitality, which is HT. I'm not saying this is a buy, but you probably never even heard of this one. A lot of people never heard of this company. Dividend yield is really low because they cut it a lot. So just think about that. I think the dividend yield right in the pandemic era, right before they cut it, was like almost 20%, something crazy like that. And I was actually looking at them back in the day to buy up their debt. I should have done it. Like, gosh darn it, I should have done it. So they had some interesting bonds, and I looked at them. I was like, I don't think they're going to go bankrupt. And I was also looking at their preferreds at the time too, but I didn't pull the trigger. I wasn't thinking about their common stock, even though their common stock, and it was around this price point, by the way. I wasn't thinking about buying their common stock, but their common stock performed, still pretty good even after today. Yes, up 100-ish% around there, whatever. But the bonds did really well, and the preferreds did really well too. And especially when you consider on a risk-adjusted basis, like the risk you took was, not as nearly as much. Okay, so we have another question coming in. Thoughts on Wall Street now panicking a bit and reducing price targets on Tesla, citing reducing margins? Apologies if we already covered this. So I do have a video that's coming out on that, more so a reaction video to me, Kevin. But my thoughts on it that I can share in a more concentrated manner right now is, I mean, I don't know why they're pricing that in now. I mean, I feel like that was like a long time coming, or something that was pretty easy to foresee. Like we there were plenty of signs to see in 2022 that there was going to be demand destruction, or demand destruction was kind of flowing through. And knowing where Tesla kind of prices in their products and who they're kind of targeting, um, that category in discretionary spend, specifically new cars, it's pretty obvious that was going to get hit. So I think, like, I don't know, but anyways, I think the price trajectory for Tesla is justified. I'm biased because I have the negative videos that I made in like February 2022. So, it goes in line with what we were saying. But I'm going to talk good about the product, because I'm not going to be, Debbie Downer all the time with Tesla for everything, because I am also biased because I really do love the product. I love my car, and I like the way it drives. I don't really have any problems. I didn't have any gap panel problems like a lot of people do when they got delivery. I think a lot of the production quality, they've really fixed out a lot. Even my first one wasn't bad at all. I didn't have any panel gaps either. I got lucky with that, I guess. But well, that model was I think, or that year make was 2019 or 2018. I think it might have been 22 and 2019. Point being, there were still the issues of the panel gaps. And now the interior was upgraded. I like the interior, more leather, more wood. So now it makes more sense, because I'll be honest, I'm not a fan of the original interior. Thought the original interior was a bit plasticky for the price, but somehow I actually made money on the car. I don't know if I discussed that. Made money on the car, and I was able to also get rid of my other vehicle at a price that was absolutely ridiculous. And I'll tell you this: I am perhaps me and my wife, we probably contributed, between the two of us, to the collapse of Carvana. Obviously, we didn't cause it, but like, we were part of the broader issue that Carvana was doing, which was completely overpaying for vehicles, absolutely overpaying for vehicles. Like, damn, that's the insane part. So, yeah. Yeah, okay, so we're in agreement there, more money. Yeah, because yeah, I thought it was easy to see. But still, Tesla investors still think it's not easy to see. And one of the things you'll see in the video is I kind of make fun of, not overtly make fun of, but yeah, kind of overtly we make fun of me, Kevin's calculation of the growth rate. It's really funny, because it's like copium to the nth degree. It's kind of insane. And yes, Julius, we're still going, but I'm going to be cutting it off soon here. So TCI, we'll go over TCI. Taiwan Semiconductor as well. Okay, you're the last question, Catherine. You're the last question. I'll cut it off there, because then I'm gonna go drink some tea, maybe. I don't know, man. Transitional realty investors, multifamily, probably. What is this? P ratio. Oh, it's a little tiny company. I'll have to take a look at this. I have a soft spot for the small caps. Not gonna lie, I do. Okay, so it's like probably like a C corp. I don't know if this is a REIT. This is Realty Invest. What is this? All right, so I'll take a look at this one, and if I like it, you'll see a video on it. Make a video about solving the money problem. Oh, I don't think I have the energy for that kind of stuff, man. I think I mentioned him in my last Tesla video. Mention him by name. If you guys haven't seen my last Tesla video, go check that out. Just basically kind of discussing what I feel about Tesla going into the future and where I'm at with Tesla right now as a stock, not the company. But yeah. Yes, totally true. Totally true. Check HSTM. I shall also check them out. I'll write them down here. Okay. And then with that, I guess we'll close it off. So next time I do a live stream, I'm gonna have it organized again back on what you would call it, OBS, and you'll have like the intro and all that jazz because it's nicer there. Oh, sorry, TSM. Sorry, I almost forgot TSM. So Taiwan Semiconductor. Before I leave, I never covered them. Don't worry, I'm doing it now. Taiwan Semi. All right, so TSM. Oh, they're still at a lower price point. I mean, because I think a lot of what the market. Oh, I forget year to date. Like we just started. I mean, this nice little rally here because I think that was like the Buffett rally or whatever. That retail was like, Buffett. But I mean, my gosh, it's really pulled back nicely. You're getting it at a historically low multiple. I don't think it's like the lowest multiple ever. I'm not entirely sure. But relatively to recent history, historically low multiple. It's lost a lot of the gains from the pandemic. Honestly, I would need to do more research, but seems like a solid company at a fair price. And some might say that's actually a good price to buy a solid company at a fair price. Great. You have the political risk, how people feel about the whole Taiwan, what's going to happen with Taiwan, and just the sentiment around that is enough to kind of keep the price down for a while. I don't think I don't consider Intel like a real threat there, although Intel is kind of moving in that direction with their partnership with Brookfield, et cetera. And of course, they're going to build their fab facilities here in the United States, but Taiwan Semiconductor is also doing that. So, it's not like they have a monopoly on such a thing. But yeah, that's my closing thoughts. Okay, so Michael, we discussed that in the community. If you ask this again on the next live stream, I'll give you my thoughts because I'm closing off here. Quick thoughts is if you think things are going to be better than what's priced in right now, it actually looks interesting. I think it's trading below price to book, so it's actually one that's on my radar, on my watch list right now that I'm doing more research on. But yeah, good you asked that. All right, with that being said, guys, thank you guys so much for watching, and I'll see you guys on the next one. Bye.